There we go. All right. Hopefully this works now. What a mess. I don't know why it's the same link over and over again. Let's try it again though. Yeah. It's kind of doing what I would expect it to do. Hey, good morning. Sorry about that. I mean, we're not missing a whole lot in the first 15 to 30 minutes, but still not a fun time when your stream is acting out, acting funny. Um, Apologies for that. So, yeah, so, you know, this kind of a move in extended hours because they released the earnings report this morning and it was a good earnings report. This is interesting, the zero. Now, I'm not sure if that's accurate, like if there's another number there and they're just averaging or, rounding to zero. But that's kind of interesting. I'm pretty sure I could be wrong, but that might be a big deal because it's been negative earnings per share for a while. So maybe the first time it's flipped in a long time. Yeah, that's what it looks like. Now, this was positive. This was August 2023. That's interesting because that's the last time it was positive was 2 years ago, which is that cycle we were talking about. And that was positive. This is not even, this is just zero. Anyways, yeah, I think that's pretty fascinating. This is something to think about. But I do have reservations about this move today. I'm not really sure there's much to talk about, to be honest, in this 8% move this morning. I'd love to tell you it's going to keep running, but the truth is that you have to have there's two things that need to happen, and one of them's already kind of messed up. So the first is that I think 316 has to hold. 316 is the most important level in this range, in my opinion. Um, Outside of like whatever bottom you choose to use, the 316 level is probably the most significant marker. It's not just because there was a gap there on the previous run up. This is starting to look like, oh, it's the same thing, right? Bounce, bounce, gap up, bounce, bounce, gap up. It might be, but there's another reason why that's really, really important, and it has to do with the shifted values. And I don't want to go into like heavy detail right now. I did it last week. I'm not going to do it again this morning. But it's actually a very significant value, which is interesting. Now, I actually found that I thought it was 318 when I did the math. And it has to do with shifted bottom values from previous support regions. But it was 316 where the backup was. So I'm using 316. That area, if you can tell, it's the same area we wrapped around last April. So a lot of connection to the liquidity range for sure. But I would also just caution you that if it doesn't find support above there, it ain't going up. And I mean that in like kind of a double-sided fashion, right? Likewise, I think if you reject here, that's very detrimental. It's more than likely that you're going to go down for your spring. I'm going to point out something that happened last time, and I want you guys to just kind of take a look at this. Now, I know that the last time, like this is a repeat. It's not going to be necessarily exactly the same. But I want you to notice, like, this is the same place we were at earnings here in May 2024. You'll note that there's a push up above to 20, and then it pushes down below. When it comes back up again, 318, and then it pushes down below again. And what's significant about this, aside from it trying to like push and make a new low right here, and it does by like a fraction of a penny or something like that, like right in this area, it also dropped beneath any of the uptrends you may have drawn at that time. Like this is even right here, like a fraction below. Very, very, very minor, but it's still there. You know, it's significant in that regard. And then there's also this idea that if you look at from the bottom, this was like kind of a hook, right? So from an outward appearance, if you had had a trend here, this would have been like a check and then a double test, and then this would have been a weakness right on earnings. It drops slightly below. I'll delete this now. It drops slightly below it, not by much again, just fractional penny kind of values, but just enough to sort of tip you off, and then it drives the price back through. And so when I look at these things, I look at it and I think that the overall picture here is pretty similar. There's some differences, right? But the point is that rejection off this level and support off this level is ultimately what defined the movement in April of 2024. So what does that mean right now? Well, this area, again, we've wrapped around it. You can see we're interplaying with that area quite regularly. And if you look at this, even look at the breakdown over here, you can see that that's the area we're wrapping around. Support, testing it, strength testing it, right? Resistance, dropping away from it, so on and so forth. Okay. Repetition of pattern is also present. So you can see that this is the same or similar, I should say, interplay that happened here, albeit this is a little bit higher, but you can see the exact same pattern. I mean, this is essentially like a behavior for this particular operator, is that you come down, you check a level, you weakness the level, right? You strength test it again. If there's weakness, you drive below it, and you try to push down. And this is where we had a change of character more recently. And I could talk about that like as a big picture, or I could talk about it as a small picture. I'm talking about there's a pattern of breakdown, 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 and then there's a higher low, and it jumps the creek, right? And that's the resistance. So I'm like, that's what I'm talking about right there. You can see the same thing here. Check, weakness, reject, try to go down low. So why am I talking about that right now when we're up, 8% to 6% or whatever this morning? It's not that complex, pretty straightforward. If you're above this level, and this is where the gap is right here, it's on the same two markers that I just pointed out. If you're above that level, I think you've got some strength. So we're coming down on top of right now the 4-hour 180, and this is one that we regularly will come back and test before trying to advance. We did it here in May. We did it here again in July. And typically this is also where you have a distribution problem, because anytime it's come above here, as you can tell, really in the past 3 years, anytime it's come above this level, it's distributed, except for a few specific times. But even back in, December of 2024, before that, you had 1, 2, 3 times right here in June 2024 through July 2024, so on and so forth. This goes back on the history of AMC all the way back to like forever. I mean, the only time we've really ever jumped this level, this 180 on the 4-hour, and you might use a 200 SMA and say it's pretty similar. It is fairly similar. They're not super different. So if you're looking at a 200 SMA, you're probably thinking, yeah, they're probably about the same. They're very similar. But you can see, like, during the accumulation phase of 2020, it's the same thing. You have continual retesting above it, and then you're distributing every time. So basically you have sellers jumping in every time you push above 180 until here, right, which is after the liquidity test down, the strength test down, after it pushes to a new low, then you have a jump of it, and it finally jumps it, and it holds that jump. And that's really what you want to see. You don't want to see, I don't know, like most of the time, if there's not that spring, if there's not that final sell down, you really don't want to see, or an attempt at one at least, you don't really want to see it jump too early. Now, what makes that an exception here in 2024 is that we're really far away from it. And I've shown you guys some numbers before on this and talked about how if you go back and you look at this region in 2024, there's arguably like a lot of really good measurements for 50/50s here. None of them, except for one, which is a bizarre one, none of them lead you to like 12, 13 bucks. Now, I thought it was going to go there to back test, so that was the reason why I thought it was going to do that. But a lot of them have more to do with this EMA, like this level around 5 up to about 550 right here. And most of the measurements, and including the trajectory measurement here, actually point you towards the EMA right there. And that's where you end up consolidating. So if you do a triangulation, you can see that that's what was really in view. That's where we came back down on the 15th of May and settled. And so the EMA, 180 EMA, in my opinion, on the 4 hour is a very, very critical level. So right now, if you saw it hold above there and then advance, and I would suggest it needs to then jump the creek, right? So it'd have to hold above, and it's not doing that right this second, but it'd have to hold above roughly that 316 level and then advance above 350. That's really the buy-in moment for smart money. That's the cue that this thing has some serious strength. It's going to go. Otherwise, this pre-market action, I think you have to just take it with a grain of salt for this time being. Because again, just like in 2024 back in April, in that big run-up we had, there was an early check on it during the earnings report right back here, and then it dropped from it, and it actually bounced beneath it before advancing, and it did dip. And we see already that there's an indication that that might be happening. We have right here a drop beneath that rising trend. This is kind of the last resort, if you will, on the bottom. There's only 2 wicks here. Like, this isn't that complex. There's the 2 bottom wicks, but that's it. I mean, there's nothing else below that until you come to the local time frame. But you can see that drop right there that happened last week. And it dipped below and went to 270s. And I'm going to double check that bottom, but I think it's 276. No, it looks like 278. My apologies. And then I think right before that, it did make a lower low. Yeah. So we're talking about if you're locally looking at this as a reaction, then you're talking about a likely phase B bottom. This would be like an auto reaction after a sell down, right? So you have a buy up, and then you have what could be a reaccumulation. This would be the bottom, the selling climax. Auto reaction in phase B would be implemented in that. And really, you could just be starting that. We talked about that before. I'm still of the opinion, and I'm not going to change my mind about it, that not yet, that really we're talking about late August as that area. I don't think it's going to be right this second. But I do think that earnings presents an interesting opportunity to kind of watch and see what happens with the price action and the on-balance volume going into the next 10 days. Because, again, it is not impossible that this holds up if there's enough strength here. That's where you get what's called a last point of support instead of a spring. If there's a strength test that just fails to go lower, there's really not enough sellers. Sellers would have to be completely exhausted in order for that to happen. But right now I'm looking at it like, unless this makes that higher push, I'm very doubtful. And I told you guys last week, and I hope you remember this, I said if this thing like gaps up and runs high without making a low, I would be very, very cautious about that move. Because even if this were to advance to the top, it's entirely possible this could then distribute down, because this is, again, an up thrust that doesn't actually have the lower liquidity test after you've made that drive down low. It has to be both. That's what I'm saying. Like, this is not really anything to write home about just yet. I would not look at this and say it's going. Not yet. A good buy is if it holds above 365, again, 350, 365, and then continues to advance. It has to be an accumulation in this pocket right here. If it's a distribution in this pocket, you're really just looking at like a late kind of up thrust. And then you're likely going to even have, like, you could even have like a UTAD is what they call it, right? Which is like your 1, 2, 3, 4. Then you could literally count it 1, 2, 3, 4. And I'm telling you, if that happens, it's going to be ugly. You really don't want that to happen, because then there's a chance that this is going to go pretty darn low, pretty darn fast. And we really don't want that going into August. We want to see it go down. I keep saying, like, we really want to see it go down first, right? I mean, that's just kind of the way it is. Ideally, that's the way you want to see it go. So this may look like a bunch of random stuff, but what we're really talking about is we're talking about the final moves here. Like, this is like 0 hour. I mean, this is basically when you're talking about the event is happening. So at this point, for someone to kind of, I had a person come on last week and say, rightfully so, because they were like, did this TA for like an hour and a half or something. And then I said, well, there's a pattern at the end that suggests you could go up or down. And that's always that cat ear is what I call it. And that's a difficult one to read. And they were saying, well, so we wasted all this time because you don't really have an answer. And I said, well, I tell you guys, like, I think the answer is right here. If the price manages to do the dip that it needs to do now and get to that liquidity test, get to that strength test, and it does it now, then I'm thinking it's going to go in August, like late August. It's kind of backwards, from a lot of expectations. I get that. For August, September, the market tends to be kind of crappy. It usually is really bad, especially on like a election year. But I believe in earnest that if it can make that move early, that it's going to be positive for us. However, a chop here and sideways action doesn't really read as positive to me. And a chop going into the end of August right here without a lower liquidity test does not read as positive to me. I can't see it as anything but a weakness, or at this point that this dropped below and has yet to make a try again as a strength test. Once it does that little dip, it needs to kind of bring the price up and then drop it back again. And if it just kind of stays elevated and doesn't move, that's not like a bull flag or something. Typically that's like a distribution because of the fact that this dipped low. And some people are going to be like, well, isn't that the spring? Well, no, it shouldn't be. Again, that was like the initial punch through. So I'm maintaining like a sense of like, look, the best buy-in, if you're looking for a buy-in, is probably down here either at 246 or slightly below. If you're just looking for like a knife buy-in, like I just want to buy low, and you don't care if it drops a little further, because it could go pretty low. I mean, it could go down to $1.80. We've talked about that before. But if you're just looking for shares, like anywhere at that floor below is probably a really good buy. If you think this is ultimately going to be bullish, that's your choice, not mine. Then I think that, yeah, that's a good buy zone down here. If you're looking for confirmation, it's not going to happen until this. And I've wondered about 350. I've wondered about whether or not we actually see a backup. And I think it's possible that we might see it rally above when it really does run. We might see it kind of run up hard, maybe shake out a little bit around 312 to 316, maybe even see a backup right there. And it should show support right above that level, or at that level even, at 316 to 318 region. You could say up to 320. I don't really think it matters that much, because you're looking at that as the primary jump right here. So if you're looking for like the best confirmation, it's really that support. And then if you're looking for just a good buy-in, I don't think now is the time. I mean, if you're going to buy in just shares only. Just do it whenever you feel comfortable, you know. But I wouldn't suggest like it's going to just keep rallying just yet. Um, and I said it before. I'll say it again just to repeat myself because I think it's prudent in this case. I was very hesitant if it gaps up and doesn't hold because of earnings. And I was warning you guys last week, like just be really careful if it runs up hard because I don't think it's made that lower test yet. So that would mean that this is like an institutional pump before a dump, potentially. 4-hour MACD's crossing, that looks kind of strong. It's still above or trying to fight above 4-hour 180. So if you're just looking at like, here's the base technicals, it looks kind of bullish on, at least at a glance. I would say your RSI looks like it's basically peaking here, at least in the current trend. MACD's not even close, but you're also slightly below now, so it has to kind of build back out. Is it impossible that this, comes back up and just runs up again today? No, it's not impossible. But again, that's just kind of looking at the overall picture as like, okay, what else, right? Are we going to see another buy-in? Are people coming late to the party to buy in? And then is it ultimately bullish or bearish? I think you have to wait. And I'm not saying wait forever. I'm saying, at least for now, it's not broken out. Even if you were like, hey, this is a huge buy-in with a lot of volume or something in extended hours, I still wouldn't look at this and be like, oh, it's broken out. I mean, I don't think it has. In extended trading hours, it looks like it popped above what we would consider like the trend there. That's not a bad sign necessarily. You want to see it push resistance. In regular trading hours, there's no push above. It's not even close. It's still below it, but I do think there's a minor push right here. Yeah, so it's there, but it's a different creek. It looks like that drop is kind of steepening, which again indicates like downward pressure if you didn't already know that because of the volume. And then we want to look at probably want to look at on balance and just see what's going on there. Yeah. So there's been like repeated pumps. Now, one thing that I would say about the on balance right now is that even though this has had some pretty big slumps in recent times, the on balance is staying highly elevated. I still have a lot of question marks in my head about this because, again, it did drop the trend right here, and during that little weakness that happened last week, you can see on the on balance, it also dropped that uptrend. And there's a lot of interpretation, I suppose, we could take from that, but I would suggest that once again, like that just tells me that there's a strong possibility that this is going to reject here. And usually if that does reject, that's kind of the nail in the coffin for a final sell down, which is ultimately kind of what I want to see. I mean, I would rather just see it go ahead and do the spring motion and go low. So yeah, best case scenario, you've got kind of a double flush that's going to lead you to a drop. Finally check the low liquidity. And guys, when we first came down here, I said I didn't think it was going to come to the bottom, but it would pump up and then eventually come back down. So like the motif here has been the same. I mean, it's kind of boring at this point, but the motif here has been the same throughout the last couple of years, which is that this would kind of come back up, retest this floor, and then probably drive back to a new low. And albeit things have happened in a little bit of a slower pacing than maybe we would have liked, but this makes sense to me. All right, this makes a lot of sense to me. So I'm not worried about it. I'm just kind of waiting it out. And again, I'm not saying it's definitely a bull trap, but I do think that there's caution to be had right now. A lot of caution. So it's better just to wait for the confirmation if you haven't already pulled the trigger. And if you have, then I don't know what to tell you. You could be in a position where they just kind of suckered you into it. We have to wait and see. A wait and see approach here is appropriate because of where it is in the grand scheme of things. But, I digress. Is the unbalance important? What do you mean unbalance? You mean the on balance? After 248, is that bigger move coming? Yeah. Yeah, I think so. Yeah, on balance is really important. It was... Look, I know that my charts get really messy. It can be a little bit obnoxious at times. I get that. But it's really significant because in the grand scheme of things, what the on balance is ultimately showing you is like buying and selling trends. And what you'll note here is that during this entire downtrend, your on balance volume has actually been trending upward. So this is a massive divergent region. While this price has been walking down since that initial buy-in, you would expect the on balance to move with it, but it's not. It's essentially moving against it. And it's supposed to kind of cue you in to potentially like the direction that really that smart money is going in it. And you might think that's really confusing because you're like, well, how in the world is that happening, right? But that's the idea of divergence being significant, right? And why it matters. It also matters because when I looked at the 2020 example, and I talked about that a lot, in past times, it's been a long 12 months, right? But we did look at the 2020 example. It's no different. There's a significant rise in on balance as the price is selling down. And as people are saying, like it's being shorted to death, and it's going to 1 and it's going to go to 0, and it's now a meme stock and all this other stuff. While all that's happening, you quietly have evidently this looks very similar, doesn't it? There's the 1 2 3. What? It's right there. Yeah. Is that not like pretty much identical to what we're talking about now? Well, the answer is yeah. I mean, it is. You quietly have during this time period, the biggest buy-in is actually right here. This is like peaking on balance. Now, on balance is not designed to be like numerical in that this is supposed to represent movement over time. So it's more about trend than it is about numbers. Does that make sense? I need to repeat that one more time. It's more about trend than it is about numbers. However, there is a very strong connection to where the numbers are and where this ultimately this creek or trend that we're following is, because you can see that in the beginning when this enters the range, notice where this is on the kind of on the spectrum of on balance, right? It's considerably low. Like this is a real sell down period. Like the price is moving down, on balance is trending down. There's no sign of reversal. Then there's sign of reversal in life, and then the on balance never looks back. It just rises pretty much during this whole time, but notice that when it comes back down, right? This is really interesting to me anyways, because I feel like this is kind of an underlying, maybe an underlying cue, so to speak, as to what the price is really doing. Notice that when it comes back down, it finds support higher. Again, it's this idea of like that final sell down is really what drags the price back down right here. That's like the really big sell down that happens at the very end. So, if you ask me, like, is it significant? I would say it's probably, in some ways, it's one of the most important indicators that I've found in 2020 that really signaled where this was truly going and where it was going to be. And all of this happened, by the way, before those big buy-ins. Like all of this happened, this buy-in right here happened before people considered it, buddied up with GameStop, so to speak. and so on and so forth, right? Before the supposed squeeze, this is on balance is tracking up during this accumulation phase. So that to me is important because I look at this then as a series of buy-ins, right? Where you're getting like smart money buying it up and causing this to kind of stay elevated essentially during these downtrend periods. You're really not getting like a one-to-one downtrend at all. Yeah, there's a downward motion and a downward motion, but it's refusing to kind of drop too low. I think that's very significant. So when I look back at this, it's impossible for me to see this and not kind of see the connection that then happens, because notice that where we come back up to, where this on balance is right there, I'm purposely not showing this right side because it goes like crazy high. But notice that this area right here that's being used as sort of an anchor point, notice that jump down right there, right? That marker here, look at those like 3 markers right there. Again, on balance is not so much about the price itself. It's not supposed to be about the number itself. It's supposed to be more about the trend, but it does interact with itself, which is significant. Notice that right there, and then where we are, right, when we're pushing up here, and how that's marking the same places, but it's way elevated. You know, that's a considerable divergence. So that's like looking at this in retrospect saying, oh, look, it looks like it's going and it's following this initial trend point and directional input this way, even though the price is doing essentially the opposite. And then notice what happens when it finally does jump. Look at where the price action comes back to on these trends. Right there. This is not that complex. I think you could have done this without on balance. You could have figured this out without on balance by using like support, weakness, resistance. We do that all the time, right? We look at these markers of like, that's where the support is. That's where the drop down is. This is where the middle zone is. We just did that like 30 seconds ago in the current time frame to kind of just demonstrate. And then this is like a push on that resistance, a check on that resistance, a push. This doesn't even get there, but notice the on balance does, right? People want that buy-in when it comes down low. They're buying more here than they were up here in theory, or at least as much. It's the same like kind of amplitude of move. That's an accumulation, right? That buy-in is happening repeatedly. So you have a buy-in through the whole range, you have a buy-in again through the upper half, and a buy-in through the lower half of the range, and then you have a final buy-in with that liquidity dive at the very, very end. Guys, this is like the same move repeated again. So it's like, how do you accumulate shares? Buy. But you don't buy enough to make it go, right? You don't buy enough to jump the range, and you allow sell-offs to take you back down to buy in lower parts of the liquidity zone, so on and so forth. So then this buy-in, look at where it goes all the way back up to the top again. And this is the one that during the markup phase that looks the biggest because volume pours in like really fast. But notice it's the same levels from bottom to top. And you're really looking at this, you can tell like, yeah, that's the same region. Just the last buy-in right there. But now you're buying from below here to above here. You're breaking out. So now this buy-in is ultimately like showing its teeth, right? From low to high. That's the swing, the dive down and then the push out. Now I noticed that was very similar, although it's not necessarily exactly the same. I noticed that was really similar to what we see in 2023 to 2000. Really, it's 2024. I'm sorry, to now, that 2-year cycle. But it does kind of start before then. So you take this for whatever you want to take it for. This motion right here is really a big part of my focus in the last couple of years. And it's kind of boring because it took a long time. But it is interesting then that when it comes back up, even though on the on balance, it's finding support here. It appears to be finding support here at like this negative 200,000 is what it represents now, what the number looks like now. It actually ends up being that same level that we find support later across the yard, right? Across that 2-year cycle, 2.5 year, but 2 year from here when it dropped to May 2021. It's just the same level. Well, I looked at that same idea locally. You can tell that the numbers are pretty different, but conceptually it's the same thing. And I've been saying that I think that what we're talking about is ultimately like, yeah, this is at an angle potentially coming down as opposed to horizontal, which is significant. I don't think that should be like dismissed. But ultimately, like you can see where that original buy zone, that cliff level is. There's a couple different ones, and I've talked about why I wasn't sure which is which. And lately I've been kind of favoring this 30 million one as opposed to the low one, the 12 million, based on the setup. This to me looks the same though. Like it's a 1-2, there's a drop here. Maybe it goes up, maybe it doesn't. I'm not going to say it can't, but if it's a LPS or something that just doesn't have the dip, seems unlikely to me that it doesn't have the dip. But overall, this is the same setup, you know, buy in, buy in, buy in, and then you're just waiting for that drop and then the buyback through. And if you look at the on balance, it's essentially the exact same setup, minus a couple like small things. It is. So the drop-in zone back here, to me anyways, it represents that region that we're talking about, right? Where we're kind of creating an anchor point way up high. And we can talk about this in regards to a trend. We can talk about it in regards to just liquidity levels. It doesn't really matter. This is ultimately what I'm talking about, is the region from about 11 up to 19 as like that drop-in zone. This is where that hook ultimately is made. And I think this is the middle point of that. So if you're looking at like support, middle point, hook, like we were talking about before, it's right there. It should be around 13 ultimately in between the two kind of points. That's where it appears as well when you look at this with the shift on and you look at where that is. Look at where this is here. Like there's a clear and evident wraparound right in the middle here. And even more so, like if you look at it like this and you think about this whole thing as like the wraparound, you can see that support, you know, rejection in the middle and then coming back again later and testing it. You see that wrap happening right there. That's very significant. It is. So, you know, I look at this and I don't see it as a one-to-one. I don't think it's perfect, but it's very, very close to the same ideas and very, very similar in concept. So I think this is likely what we're actually experiencing. And that when we do see this kind of breakout in the end, and it's already on the chart, by the way, you're like, what? Where'd that line come from? That's the same line that we had back here. What? Really? No, yeah, seriously, it really is. It's the same line. And this is the same kind of path, but it's here. If that doesn't click and create like the aha moment for you, like I don't know what will. Because this to me is a really obvious, it's the same thing like that we experienced here. So if you're asking me, do I think it's going to go up or down? I'm going to say it's going to go up. And this is where I had like a defensive moment like a week or so ago with a guy who said, well, you just think it could go either way. Well, no, I just think certain things need to happen before it goes up, but I think it's going to go up. Like that's the same exact thing. It just has the chart shift. This is the shift. That's the 226.36% shift that we've been talking about for a year plus now or whatever, or almost a year now. I guess we didn't really explore it till December of last year, but that's the chart shift right there. So it's literally like almost the exact same thing I've been trying to say. So like, do I think that this is likely going to drop again? Well, yeah, I mean, it did here, and I don't necessarily think it has to go super, super low. Like I said, I'm pretty sure that this could probably afford to go back to 196 or something, but that's like, I just don't know how like you can look at that and say that's not basically the exact same pattern playing out, but in a maybe a little bit of a different way that people don't like as much. It's not as fun, you know. No, it's not as fun. But it's good, right? By comparison, we would say that if you look at the entry zone here, which was again like June, and you look at the exit zone, which is June, that's the 2-year cycle right there. That's the one that we were talking about, and I've been talking about it quite a bit. That particular model, that same thing is why I've not been like perfect about it, but that's why I keep saying like August. Like August is the big one, right? That's where that drop in happens. As best as I can tell, it's the same zone. Not because of the shape of this, even though yes, the shape is very similar, because it's where that ultimately drops through, you know, and makes that attempt. If I'm wrong, I'm wrong, but I won't be wrong about the concept, in my opinion. That sounds kind of arrogant, but it is what it is. I think the concept is really solid. My interpretation might be off. Like maybe that's not the right place to measure from, but I think the concept is correct. That's been my thesis for a while. So when I talk about on balance volume, just to come full circle here, I am doing a little bit of a comparison because again, it's so similar that it would be, in my opinion, unwise to not draw the comparison. It's also, in my opinion, one of the best ways to kind of analyze the possibility of an accumulation here and what a spring looks like, how severe that is. Even though the price action's not doing that much, it comes like slightly below the bottom. It's not significant. Not enough that I would be like scared or anything. It just barely comes below this phase B type bottom here at 12, which is not what it was at the time. Look at the on balance though. Like look how drastic that sell down is. Look at the volume in it, you know. So put it through the paces if you want and just kind of test that idea on your own time and check it out. But that to me is very significant. I've done these comparisons for a while. I posted a bunch of them in the Discord a while back. I don't think any of my estimations were particularly great. You know, if I were to go back and look at them, I think the shape that I had and the idea that I had here of coming from whatever that top was down and then breaking down, that looked fine. I think my estimation for on balance has been mixed. Like I feel like there's been times where I was pretty close to like correct. Like recently I've been pretty close to correct. There's been other times where it's just not the same. Like here you have a rising, like it's continuously coming up, which is again, it's an upward trend, but not only that, but it's making higher peaks, which is interesting. And then if you go to like the recent time frame, it's not doing that. It's kind of sitting flat. Like we're coming back to the same level over and over again, which is this top here around like this 50 million, whatever that may represent in the 4-hour time frame here. That hasn't been like upward, right? Now the overall move has been, you can see the same kind of pattern of like, oh yeah, that's moving up right here, you know. And I think that I even have the line probably correct on the chart right now. It's this guy. I have another one on there. This dude right here. Because of that drop down ledge, that's what cued me into it right there back in February of 2025 this year. This particular area right there is high interest to me. That's the walk down level, I think. That's the area where I'm like, sure, if you're going to up thrust, you'd probably do it there and drop through. This was much higher in 2020 in terms of like proportion, like relative to itself. So if you go back and look at my old charts, what I thought was going to happen was when this pumped up, I thought it might go as high as way up here. I've still got the red mark on the chart because that would make sense to me if this is like rising and widening out. And then you'd have like a flush down that also widens out. And that would be more comparable to what we saw in 2020, like 1-to-1. That's not really happening. We're kind of pushing up. We are getting a buy-in, but it's staying extremely level. Like, so these three are now, these are the ones we were talking about in comparison. These are the three motions, right? These three are extremely similar in terms of like their height, just based on, again, proportion. So it's not impossible that we're just not done yet, and we will see some kind of a pump here, you know. And I think that maybe long term, like this is going to look similar, but it's going to have like a different overall picture. I don't know. Maybe I'm wrong, and this is still really early in that pump phase. That's possible. I wouldn't be happy with that, but it's definitely not impossible, because then August wouldn't be the day. It'd have to be something back here, and I don't even know what I would use. I have no idea. But like, I just at a glance, I don't know what I would use. But I would say that everything else really points towards this being correct. So I wouldn't, it doesn't really make a huge amount of sense to me if that were the case. That's not what I'm saying. But I always want to be cautious. Just to kind of second guess myself is important, so that I'm on edge and I'm never like lazy. I want to be alert. So if there's a change, I'm not married to an idea that then causes me to lose money. Would be bad, right? Like, I need to be aware of possible wrongness at times, which I guess makes some people uncomfortable. They don't like that I'm considering that I could be wrong, but I don't see that as a bad thing. I see it as important. So I'm looking at it like, you know, maybe in looking at the grand scheme of things and looking at like where these markers are, we can see some similarity to that idea of like, where were these drop down levels? What's the general trend here? It's still pretty elevated. I would have, again, put it going higher in the past. I don't think I would have changed that, because there's nothing I could have seen differently. This is what I saw. But if you look at the overall motions here, check out where those levels are on the trend, then it makes sense as to why they're kind of not moving forward. Because you can see that each of these reaches up and hits the same trend. And that's where the rejection is happening. No matter where the on balance is at that time, that trend seems to be like where the heaviest amount of rejection is. And that's your major creek, right? That makes sense. That's why when someone asks me, where is the best buy-in? I'm like, really, like, it's not until this breaks this creek. And I don't think that right now popping up to 314 is that break. It hasn't actually done that yet. You know, it's right over here. And it could happen today. It could happen a week from today. It could happen 10 days from today. You know, it could be a month from today if I'm wrong about timing. Sure. But this is where I would see that ultimate jump right here. That's why I was saying, like, even though it's tempting to just kind of buy when it's up 8%, and you don't want to miss out, unless you're doing like leaps or something long dated, that's kind of unwise, because it's not really out yet. It's just run up hard. So it looks attractive. We had a good earnings beat. It looks decent, but it's not out. So on balance is heavily tied to, my perception of on balance is heavily tied to what would be a run up here. And it is pretty fascinating to me that, and I just think it's really interesting that now looking at it, we're like, oh, yeah, this totally looks like the exact same line. I'm like, yeah. Did you miss that, Booksy? I don't know if I missed it or I just didn't think about it like that much, because we'd already talked about the shift. So I was like, it's not, why would it be any different? But isn't that interesting? It's the same line that was tested. And it actually makes a lot more sense of perhaps just doing that. That's kind of a new thing for me. It makes almost a little bit more sense as to why this advanced as far as it did. If you don't have a good explanation for that, this is a really good explanation for that right here. This would represent a different kind of angle on the stock. I wonder, because I know that shift value is there, but I wonder if And I don't know, I'd have to kind of check and double check this. That does look like the jump, doesn't it? As well. This doesn't connect to anything else, which is kind of bizarre. So a distribution would also be across that mark, probably here, where that made that little dip, and this rejects. This would be like the middle zone. That's kind of interesting. Well, maybe for another chart. Not this chart. This doesn't need to be any messier than it is. Let's try it on another chart. This was with extended hours on. I just turned it on, and I have a couple trends with extended hours on that I was following. But we can easily put it on this chart just to see what that looks like visually, since there's not a lot of information on here right now. Easy enough, right? Has to be the same time frame, otherwise I'll mess up. That should work. I don't think they're going to be better. I think they're going to be worse, but that's me. I've kind of already made my case for that, but when I say worse, I don't mean it's going to be like bad. I just mean I don't think it's going to be as strong. Yeah, that actually looks pretty solid. This mark. I wonder where this goes back to here as a top trend. No, it doesn't really. Kind of have to include this. Honestly, that almost looks like doesn't make any sense, but I think what this might be, because this is like the first creek cross, it's really odd. And then this is where it found support. That's really weird. I don't know. That's a weird line. I wouldn't have picked that one. I might have picked this one, which isn't that off. It's kind of the same mark, just slightly different. But I don't know if I would have picked that top one. If not for that gap right here, perhaps. I don't think I would have just pulled that out of my hat. So it would represent like a similarity to this, which is where we distributed in 2022. But again, this is like without the shift on, it's an interesting question mark. The shift is weird because it makes everything look off over here. But I'm really talking about is this area from where that reverse split happened onward. And that's not quite the same as talking about like the overall. This should be a little bit higher. And I have to make this correct. I'll erase it just so we don't have like the extra noise. This is just a bars pattern of the shift. That's pretty darn close, so I'll leave that. And then I'll just turn the rest of it off. So that's the shifted value. Is that the right? That's not the right line, guys. I must have pulled the wrong line because it went through here. Yeah. Way to go, Booksy. I don't know how I did that. I did it wrong. No, that's the right line. I've got the right idea. I don't know why I said that wasn't the right one. That's the right one. But then what was different about it was that... No, it makes sense. I take it back. Sorry, I'm flip-flopping a little bit because I'm thinking. My brain doesn't always think in like a very linear way. I was thinking about something else that had to do with this floor. And I remembered that the shift is also like triangulated here. So it's like anchored on the floor and this. And I was thinking about that creek and how originally I would have said, yeah, like it looks like it's kind of heading back towards the creek value here, which is kind of low. But weirdly, now with the shift on, I'm like, that really looks like the same value, like the same comparison. That's why I was saying not very linear. Because this would be the same back test on this creek here that was jumped. You see how it like jumped both of them at the same time? So it's back testing both this guy, which is coming down here, but also back testing, right, this guy, which is going the other way, which is much steeper, this guy. So they're kind of doing the same thing. I think that's pretty interesting to me, but I don't know what else to make of that for now, so we'll just leave it alone. Anyways, so right here you can see that back in reality, get out of my head for a minute, in La La Land here, if this were to drop down and check that low one more time, which I don't think it necessarily has to happen, like that's a really low drop. But if it were to drop down and hit that low, it may only come down to like 180s, and we had talked about 180s previously. The timing on that doesn't make a lot of sense because, again, this goes to August, so you'd have to have a pretty significant drop pretty fast. What would cause that to happen? Maybe announcing during your earnings that you're doing another, or right after earnings that you're doing another offering might make sense. I'm not saying that they will or won't, but they did talk about that offering as a voted thing. I'm curious if there's some kind of like a confirmation of that causes this to slump really hard. And that's what gives us like a sudden drop after like a burst move here today. If there's some kind of like a negative catalyst news, that would definitely be one of them that I would consider as a possibility. And dropping anywhere below that mark at 240, 248 is what was being targeted, down to 250. Anywhere below that would be a liquidity test. Could go significantly lower, right? But that's something that I would look at and say, yeah, that makes sense. And it's interesting then to take those same things and move it to the shift value chart and consider like where that is on the scheme of things. This is like a dip below, a pump above, and then like a retest on it. It's a confirmation of that. Whereas the lower one would be an implication that we actually had weakness again here. This was the buy-in. So you had like a sign of weakness that, yeah, we're coming along here all right, and we're holding on to that, but then we actually dip below it. That's a strength test, and then this is where it held on. It pumped up, and this is all like distributive action, and it's dropping you now back down to below that area again, below that trend again, to try to scoop up liquidity. And that would also make sense because you have a, and it would look right on this chart too, because it looked like it's just testing that major creek. But this would also make sense because it's like, yeah, you dip below there, and you're dipping repeatedly, 1, 2, 1, 2. This was a double dip as well, guys. I mean, you can see the same thing happened here to some degree. It rejects off the top, comes up, and then it sells over top, and it eventually hooks beneath that marker and drives the price low before like a buy-in, right? And then it rockets to the moon or whatever. Sure. I could take something like this and try to draw the same comparison to here and suggest that it's probably doing something, similar if it were to drop and reject off of that level. Granted, in order for that to be confirmed, it'd have to drop and hook off of, that's like $6. But I think it would end up being like a, probably a pretty clean rejection off of this. I'm guessing it's that level that we were seeing a lot of, that 265. But yeah, I mean, that would make sense to me too. That would change things quite a bit. I watched a recent video from Stockfather. I thought was kind of interesting because he was seeing it more like sideways here, but as a possibility, I think that if it went low, we could be in a different situation where we drop down to like 180, and then we have to have some kind of a new buy-in, right? I don't know exactly what that would look like, but it'd be pretty low. This is inconsistent, by the way, with what we saw in 2020. Just to be very clear, like this is actually kind of inconsistent with what we see in 2020 because in 2020 there's no well, I would say there's no that is where the gap level is. You can see right there, and it's very similar. But I would say that it's inconsistent because there's no major dive beneath the liquidity zone. This was very flat, right? This would look really dramatic to us. But this would be very similar, in some ways, like dropping down to like 188, and then it'd have to be like a buy back in, and it'd have to go all the way back above this bottom and then reconfirm it. So it'd have to come all the way back above 246 and then reconfirm it here. So I'll just do a really quick doodle of it, what that would look like. Get rid of that one. I'm drawing it out. I'm not really considering timing. But he was talking about like sideways, and I was like, I don't think it would be like that sideways, but I could see someone making an argument that this doesn't move until November. If the market turns south, I could definitely see someone making that argument that like, well, I think you're right, Booksy. I think it does go, but I don't think it goes in August. I'd be a bit confused by the timing, but I think that at the end of the day, like this is what you would be talking about is a rejection here, and it'd have to be off that like 265 level. I don't know why I think that's the case, because I'm like, why would it need to be there? Why couldn't it just be here? But I think it's at 265 level. It's a strong opinion about that, because that was heavily checked. It was like a little micro spring that happened right here. It wasn't a spring. It didn't go to a lower low, but it did have a strength test right there and then broke back above it. I feel like that's probably the level. But then this would have to ultimately retest 245 as the bottom. But anyways, so these are all kind of the same thing in my opinion. I just think they're different. The outlook is different, but it's another reason why I was kind of cautioning not going way too crazy on like short-term YOLO stuff, because you really don't know what you don't know. And that's the wisdom of trying to be smart about what you're getting. I don't have anything before December for options because I'm thinking about long-term. I think that's an easier position for me to take. This is ugly. This would have to be, again, some kind of like bad news, right? But I could see this being used or utilized in that way, 245. And not having like a real breakout moment. If there's some kind of a dilution announcement, that's certainly a possibility. Yeah, I could see it. So someone was asking, like, does it rocket after 245 or whatever? Look, in the 2020 model, I think you would have to look at that and suggest, yeah, like once it hits that level, you should be just going. This is the August 22nd kind of, you're down there, you're going. This is a very fast moving model. This is the one that you're already down there. This is why I was saying it's better for us to go down into earnings. Why I kept saying like I think it's more significant. Longer term, well, I guess shorter term is a better word. If we go down into earnings and we get that build out, this follows more one-to-one with the cycle, the cyclical nature of it. This would make sense to me for a number of reasons to be kind of on the move, and I am compressing it quite a bit. It almost looks wrong, when we're compressing it this much, but it's also like, that's just the way it is, like the timing, right? So it's really fast. This would also lead into GameStop earnings, which I believe is on the 3rd, or estimated to be on the 3rd. It's a similar thing, right? So this kind of a move early is more in line with what you might expect if this were going to run up, for example, into September, and then it craps out, right, in October into November, up high here above, you know. That to me, again, makes a lot of sense. This also gives this indication of like, that's a stop zone at 6. We've talked about 6. That's the middle for a number of reasons. We've talked about that. That's the coordination right there. Again, the hard thing about these pivots is just not knowing whether it's a high or a low, and I hate that, but it is what it is. I can't unsee things like that. And then looking at the overall, I'm kind of building my chart again, but looking at the overall direction of the move, I think it's very possible it overextends and then comes back down, and you get kind of an extension up into the 8s and 9s, and then you come back into this region where you're retesting this, that, and the other right around here. And this is what I've been talking about for a secondary run. If there's like a secondary run up and you basically leave from like 640 going out into January, this makes the most sense to me. That's the target, just like this back here was the target, right? Remember, like that's the same target that we had previously, essentially. It's like the exact same thing. So what you're doing is you're taking like this little guy. If you're just doing like a sideways analysis, you're ignoring the fact that this could go low, and you're just saying, well, I don't think it's going to go down here. I think it's just the same thing. You would suggest that once this makes a dip locally, it just takes off. It jumps the creek, right? Which happens here at like 350 to 360. Once it jumps the creek, it just goes, and it's similar to 2024. But then this ultimately like pumps up. Maybe it goes a little beyond here. We don't have to say it goes considerably higher. But ultimately this time it lands along it and on top of it, not below it. So instead of this being a distribution zone, this is now a buy-in zone. See how this was like hooked beneath it? But this time it's like a buy-in zone. And so you're like buying in and off of here. And this makes sense to me. This looks like just another creek jump on the bigger picture, right? We just did that. This is us recovering just like we did back in 2020. Very similar. This is us recovering that liquidity zone. Why is it not significantly higher? Why don't you have it up on top of here at like $15 or something? I've already made that case, and I think it has more to do with trajectory from the bottom than anything else. But I have already made that case several times, and I don't think it's as strong. Mostly because I think that the second move is what's targeting that high range up way up high, which isn't even that high. I think up near 20. But I've already kind of talked about why I think that is. I don't want to go into super heavy detail about it. But basically, this is sort of the simplest way to explain it. I don't think it's targeting as high of a level. So the trajectory input here is significantly lower. So this is certainly there in the beginning. You can see it, right? But then look at where that is presently, and that build out was very low by comparison. It's just not the same. It's not the same angle. So like you can pretend it's the same if you want to, but it's just not. So like maybe this goes up, maybe not, but it certainly doesn't give me a lot of confidence seeing where this is. And the fact that there's a liquidity gap here between 570 and like $8 also adds to that mystique, where you actually don't have any real trading that's happened there. They left it open. There's a big liquidity gap in that zone right above 6. So I'm like, you know, it would make more sense for me if they went back through here than if they were up here. But I guess it's just dependent on your point of view. And also, I don't think you need to go any higher to jump the creek. So why bother, you know? So the early model makes a lot more sense to me from a 1-2 standpoint. Like if you're going to do the 1-2 move, And then ultimately, I've talked about why I think 1961 specifically, if you do the 226 value, that's the same. It's the same as like the $64 mark. It's identical. So like that gap that they created at 1961. So if you're wondering about big picture still and why I think it's not going as high as maybe some other YouTube Joe guru guy or whatever, I actually think 64. I did it a couple different times and different ways, but I had it right at 64 because that's the exact halfway point, essentially from like this bottom to the top. That is the shifted value right here from 64 down to 1961. And that's the level that if you go back and you look, this was distributing along that level, and that's where that spike was. It pumped up right here and then drove back below in extended hours. And the gap, that gap zone that we see here, which is normally what I would expect to be filled, if we didn't have a shift and we'd stayed where we were, I'd be like, that gap's still open. But the shifted value means that gap is like here. If you don't think the shifted value is right, you might disagree and say it's going to go high regardless. I think it's correct. I don't see this as a coincidence, the fact that it's lining up with what is currently considered like a trajectory motion, right? The one that matches the trajectory in 2020 does not match the trajectory now. We don't have that same angle. We have a much lower angle. And it matches the wave on the macro for a 2026 high in this bracket right here. And that's exactly where I've been talking about on a big, big picture, like this wave up, down, up again, right? Going into 2000, and I'm going to kind of fudge it right here. Going into 2000, I'm not doing it exactly how maybe you could do it, but we could do it like this. Here. And there you go. There's your April 2026 or whatever. From that drop. Again, there's a lot of ways to do that measurement as a wave goes, but suffice to say, there's different ways of measuring it. I'm not going to like go beyond that right this second. But it's always been like February to like, where does this drop? Where does this drop kind of question. It's always been like basically February to April. I would even push it to May, but it just feels like a huge time frame. And I've been saying February, so I've been kind of keeping it like February, March, that time period. I think that's the most average that I've gotten. But yeah, so this would make sense to me on a big picture. It makes sense to me on a small picture. It makes sense as to filling this gap if it's been shifted down valuation-wise, if that's really the same value in some ways in previous time frames. Well, what happens if that gap fills now, Booksy, and you're wrong, and maybe this does happen and it's up high? Then we'll talk again. You know, originally I had thought that might be the case. I thought we might do something like this and then go all the way up to like 42. That is what I had originally said, because I thought we were going to come back and retest that trend. But once I did the gap thing, I was like, I don't think so. Like, I don't think that's what's in play. I just don't. And it made a lot more sense to me when I started looking at what they had done with that reverse split shift, because I was like, you know, that then makes a lot more sense of why these levels are where they are. Like, this is a truncated move right here. It's super bizarre. Think about it. It's really weird to think about how that went up high and did a liquidity test in extended hours, but then it opens lower at a different level, drops down and goes into a dip, just like we're kind of maybe thinking might happen right now, even locally, on a smaller scale. But isn't it odd how, like, when you look back at that makes this whole region, right, which is where APE is. This is where APE is introduced in August. This is where the Judge Zern decision is in August. And you look at that whole region right here, and you're saying, like, well, that's where the shift occurs. And it does. If you look at where August to August is, that's the shift value. That's the same as this value right here, from gap to gap, basically. It's the same valuation move. It's very strange, odd number, comes up a lot once you find it, and you're like, okay, it's all over the place. That is where the arbitrage, so to speak, happens, and you have the drop down right here. Yeah. But notice that there's this very intentional like cutoff, and we don't actually open at, where was it, like $8? Remember, it went up to like $8 and it opened at like $6. Why doesn't it open at $8? Why bother? I mean, if you're just trying to get people bull trapped, what's the difference? But then when you look at the creek, it's like, no, that's a pretty significantly different angle. I mean, if it had been higher up at like $8 and it had been above the top there, you're talking about an entire range now in the present time. Look at the difference between those two. So you're trying to say that they baked in a shift for a year plus? I think so. I do. I'm not a big fan of like the predestination kind of stuff when it comes to stock market stuff, because I think that there's always options. Like you could always choose not to do something or change a character. It's not like it has to be a certain way. But I think that when you look back at this schematic and you think about this breakdown as it relates to this breakout, and like the fact that this is a 2-year cyclical move right here, that's a 2-year plan to like go down and get liquidity and then buy back out. I think it totally makes sense then that could have been part of the plan back here. All right, we're shifting the value. We're going to start a 2-year cycle. Then it is then in some ways predetermined, because you're looking at August 2022 to August 2024 as this is the area where we're going to have that cycle, that 2-year cycle starting. So, I mean, when you look at it from that point of view, then the 2-year plan makes a lot of sense. To me anyways, I'm like, yeah, that makes a lot of sense, because you're basically trying to build out a down wave where you're going to buy back in and then push back out, and you're going to come back to the same level, right? So you establish at that time in 2000 and whatever, they established this really long, this was like way back, 2017 to 2019. You established this LSPY, right, which is the last point of supply, the sideways bear trend, and you're doing the same thing here during this time period as well. And then you build out a creek that you're going to jump later, and you can see the angle here that's built out on the final days, so on and so forth. And that is really, like, without going like into crazy detail, that is pretty much the exact same creek that we still have. I mean, you can see it right there. This goes back to the beginning. So if you're wondering like, well, yeah, but that looks sideways and this is down, it's not that different. Like this motion right here and this motion right here, even though they may look kind of different, if you pay attention, you can see that drop in the buy up, right? You can see the drop in right here. It's in the same spot even on the chart, right there. So for me, I'm like, I definitely could see why someone would say it should go up higher. Like I was even doing that, and I totally get that, where that comes from. But I think it was in part because of that ape creation, that this whole thing got shifted. Ultimately, it's a valuation shift, because when we were trading this region, we were really trading like down here on average. It was a 9-to-5 ratio between ape and AMC. And then if you took the averaging of those, we weren't trading like from $4 to $6. We were trading from like where we are kind of now, like 2 something to 4. It was very much different, in that regard. We were trading this zone. And that makes sense now looking back on it, because you're like, well, now we're going to go back to that zone, right? And retest that area that we were trading in here, which is totally correct. Like, in my opinion, that's where and I mean, it just makes sense. I think if you looked at this and you saw that I have a shift value, you'd probably think it's like cuckoo bananas. Like most people would look at that and think that that's wrong. But when I did that chart, it ended at like I kid you not, it ended at like 240. Like that's the last recorded value over here. And then when we dropped down, we came to 240. Coincidence? Or was it really that liquidity sweet spot that they were looking at here was being traded and now we're just kind of averaging it out? I think it has to do with the fact that they were probably buying below and then selling above. And so when you're selling above and then you're coming down and you're buying below and you're coming up, you win either way, which is kind of crazy. So like there was no reason for them to worry about share valuation for APE or AMC, because if you're shorting AMC and you're buying APE, which is the opposite of what most people did, then you're basically fine all the way down to 250. Isn't that crazy? I think that's crazy. And I think it's crazy that even if I'm like not 100% right about it, like I'm missing pieces, and like some people are gonna be like, well, what about options? And what about this? What about that? What about Antara? And what about Vanguard? I don't know all the answers. I just don't. Like I'm not able to do all of it. But what I can say is that the shift value is consistent. It doesn't seem to change. It now works pretty much regardless of where you're looking at it. But what's fascinating is that from a liquidity standpoint, this makes sense now as a top 1960, because you've already traded this region previously here when you had AMC and APE. Like the valuations of APE were low. Like they were back to like, what was it, like 60 cents up to like $2 or something, or it was like 80 cents to $2. They were really low. Like they were down here, right, during that time period. And the valuations of APE were really high. And it's weird to me that then of course, like when you get to that chart, the chart shift value is basically just accounting for this range shift that already happened. And it's also just basically a liquidity mix match between the two. And that valuation of the middle chart, which again, kind of bonkers bananas, right? Like I had talked about it a lot and I didn't know exactly what to make of it. I was trying to figure out what to make of it. And I don't think in the end of the day, I ever really came to the best conclusion. Just didn't have like a strong answer. It was like, yeah, this is here. I don't know exactly what to do with it. I think I know what's going on between the two charts, but I wasn't like sure. But now looking back is like, yeah, okay. I can kind of see where they went with that. It makes sense. And they built a liquidity zone to account for what would become like that shift that they're going to do here. They built creeks to account for that shift, that 1-2. Now they're building out this zone just like they did back here to account for the walk up that they maybe want to do. That's a weakness. It doesn't look super strong. I get that. But you also have to recognize that like once this is above the top, and if there's a distribution over here, which I think is pretty likely, and this comes back down again, yeah, like it's possible it could come back down pretty low. But if you repeat the same thing you did here and you do an iterative move, instead of going up high, right, which is like what we had previously thought, like that's the shifted value, okay? It's not the same as what I'm talking about here, which is like the non-shifted value, like as we see it, it's visually as we see it. If you do the same thing here, like look at the, like that creek jump that we would make right here, this line coming down, this is essentially the exact same thing now. It's like rinse and repeat. Notice that if you take that pre-shifted value, or maybe the better way to put it is shift value, you can basically do the exact same motion again and rinse, repeat it. And this is just a cycle of how do we get it down to where we want to get it down to. This time you don't have to do it, in a fancy way. You can just drop it from where it's at. There's no extra value shift. You just come right back down and you could like push it right back to the bottom. This is kind of what I expect to happen going into 2029, for lack of a better way of describing it. And this is really where you could have sincere, kind of a final bottom. Talk about a macro double down motion. You take away all this other extra stuff, including like even the shift valuation, And it's suddenly like, oh, well, this is just like a really big picture. Like creek cross right here. Now, I don't necessarily think it has to come that low. That's really low. It might even make sense to not be that low because it should be a little bit higher. And a lot of it will depend on what angle is made right here. I'm not really sure yet. It could change. This could be higher up or lower down. So I don't know. Can't tell you right this second. I suspect this is going to come back to near 450. That's a guess. But then I think you're going to have a pretty succinct, like on a sell down, be like a 50% retracement. But I think you're still going to have like a really obvious creek there when it's done, no matter what. So there should be something here that represents like where you're going to go later. And that, to me, works really well. It's like, yeah, that works. And then you come back down later and you basically build out the same exact thing. And you have like a macro, whatever. I think it's even more likely that that happens if this doesn't go low. If for whatever reason it doesn't make a dip now, I think it's more likely you're going to have like a massive wave here. And I know that this kind of stuff is crazy talk. I get it. But remember, like in the grand scheme of things, it's not, it may seem like maybe you're overcomplicating it, but in the grand scheme of things, it's really not that complex. You've got a wave up, that's distribution, a wave down, that's accumulation. Simple. This is just a distribution period right here, a wave down. You should have an accumulation period right here for a wave back up. And then once that wave up happens, no matter where you land, you're going to have a distribution period. I mean, you just are. You don't just keep buying forever and ever. Now, I think some people, again, and I'm not anti-squeeze or something like that. I'm really not. But the idea that this then has like this massive move to like thousands is a really tough one. I think it's a hard one for me to digest. I think it comes from this idea that this is like a macro widening wave, and that like each of these waves is more or less like kind of building out larger than the next, I guess. I don't know. It is a tough one for me because I feel that I don't think that's probably not the best way to look at this, but I could definitely see why somebody could see that and go, well, I think it's going to go way up here because, it's a widening. I don't think that that's impossible, but what I have seen is that typically like this is not like over until it's over, right? So you have the sense in which you're going to come like flying to the moon when it's all said and done. I don't find that to be completely wrong. It just doesn't feel like it would be finished yet, because normally what happens is that you get to this point and this is your down wave, up wave, down wave. So you've got the same ideas, right? It's the same principle. But normally you get to this point and there is an up wave that tests the top, which we've kind of done, and then there's a jump. And the thing is that the jump wave usually goes back to this ledge, but it doesn't just go. Like it doesn't just like take off. I don't think I've ever seen it do this. Unless it's, and some people are going to look at it and be like, well, it did it right there. It just took off, right? That's the same thing. Yeah, but to have the ammunition to do that would be pretty insane. Most of the time, what you see instead is that, yeah, this is indeed a bottom, but then there's like a build out period. So this is something I've seen very frequently, is that you do hit the top and then you come back down and you actually check the second wave that's created, this one. So you don't usually just take off. And if you do, it's typically bad. Like that's what happened here. It just took off and then look at coming way back down later. And everybody's like, why is it so low? Well, partly it's like it never checked this creek really. It back tested it, took off, but then it's like, where are you going to go later if you're just looking at creeks? Like it just never did. It's like saying, oh, well, you don't really want this to happen because you don't want to deal with this stuff. But if you just go, yeah, like that looks cool, but then look at like the downside. This is kind of where we land here with this big pump and this massive slide. You know, albeit not quite that simple, but you get what I'm saying. Anyways, most of the time, not all of the time, but most of the time, what you see is that this actually has an M cross, and it does indeed come back down again before going back up, and often even has like a final little buy-in right here, sort of like a last-minute cup and handle type motion, where it's sort of iterating and trying to like kill some time, right? And then you come across that ledge. And at this point, this is where I look back and I say, yeah, the wave analytics from here typically are where you start seeing this buy-in. And you will often come back to an area similar. You might even go higher than it. It just depends on when this happens. This is where you come back and you have a weakness. You break down from that level, create a drop ledge, right? You have a buy-in period, buy up to the top. Once you break out, this is like the bigger move anyways, way over here, and that happens on the other side of the spectrum. And if it's bullish, then this bottom right here ultimately looks a lot like a Wyckofian range, because you'll have like and in our case it looks really low, but I guess that part of that's because of other things, but there's other reasons for that, I suppose. But you would have like a Wyckofian range here of testing and retesting kind of stuff. So it would make sense to me, is what I'm saying. If this dropped, has a spring or a liquidity dive, and then breaks out, goes pretty far, maybe even to the top or close to it, and then has to come all the way back down, it might seem bad. Just like this looks like it's kind of bad, but really it's just like a massive liquidity check. We could guess that it may not come all the way back down, because if you use the shifted values, it's not exactly needing to come back down. If this is all part of a macro spring motion, right, like a phase B with a spring, and it's already beneath the floor, which is the case because of, even without the shift, you can see it's below that previous bottom. If this is already like a strength test and it's like a double strength test, down and down again, when you break out, you probably don't have to come back below this level. Like, it wouldn't make a lot of sense to do that again unless you're distributing. So even though I have this kind of low, I'm actually already rethinking it. I think it should be right there at 425. So something like that. So it won't be as dramatic as I made it look. Thanks, Booksy. Appreciate you thinking about us. Well, I don't know. We'll see. I think this would make more sense, I suppose. But I have to go with like an I don't know just yet, because we'd have to wait and see anyways. It's nothing set in stone. So long term, I think you're looking at just like that macro wave analysis of being a big buy-in. This is why, again, like I've had people come in pretty much every time AMC does anything and say that they don't think AMC is ever going to move again, and they think it's a horrible chart. And I'm like, look, man, when we were in, this is kind of the backwards nature of the market, right? This is what smart money in general wants to do, because it's easier to trade when retail, it's a lot easier to trade when retail is kind of doing the opposite, and you have a sense of control when you're basically deceiving the market into thinking something's good when it's really not good. And I think that on the whole, you want to look at this. I don't know why I have all these stats on, but I do. You want to look at this and just think about like how when we were up here at the peak of buying, like there's never been a bigger time for AMC ever. Like this is when everybody is getting, especially your YouTube people, right? You're getting like a bajillion views, and you're looking at this like we're never going to go down again. We're going to just keep going to the moon. You got people recording music about being an ape and all this stuff. And I'm like, look, man, I appreciate the enthusiasm, but this was not the time. This was not the time to be hyping up buys, was it? And yet, retail, in some retail, not everybody, okay, we're still the same like as we were then. I'm not calling everybody dumb money. I'm not, but we are in some ways dumb money. Because people are the same now as they were then. It's like the opposite. Now everybody's saying this thing is garbage, it's never going to move. And I'm like, this is backwards, dude. You don't want to be hyping it up when it's rocketing to the moon and screwing over everybody, half the population, you know, who's trying to buy into this move thinking that it's going to keep going. Oh, it'll never come down that low. It'll never go there. It'll never do this. It'll never do that. I mean, how many people have eaten those words in the last 3.5 years? It'll never come back down. It won't do that. We've got them, you know. We got them. Smart money can't possibly take it down. Nobody's selling. How many times do we hear that? A lot. And I'm guilty of, in part, because I was there. I mean, I was here during the downside. I don't remember thinking that things were always going to go and continue going, but a lot of my charts were like I remember thinking it was going to come up here and then like hold on. And I thought it would back up and then hold on. It didn't hold on, right? And I remember the same thing here. Like I had the target right. I thought it was going to go up to here, but then I thought it was going to go ahead and push back to the top, and I was wrong, right? And you see these things repeatedly where it's like they're giving you a little bit of information. You're getting that information. You feed that information. People buy in thinking it's going to go and just keep going, right? And then by the time it's like this, everybody's so tired of like the internet gurus that they're like, you know what? Everybody's wrong all the time. Nobody's right. Nobody knows what's going to happen. Even these guys that speak kind of common sense about the market, they're gurus just trying to get your money or something. Like nobody's trustworthy. Well, it's great. That's a perfect environment for smart money where everybody's in despair. They think AMC's dead. You know, it's the opposite of the hype mentality, which is what was happening here. So I'm like, look, man, I get it. There's always a possibility for more downside here. It's not impossible. The idea of $1 strikes people as extremely harsh. But the truth is that you do a measurement from the top to where that gap is, it goes to 99 cents. Like, that's the truth. You want to know what the truth is? There it is. Measure it on a chart. Like, go to where that gap value is on the shift. Go to the tippy top. This goes to like 99 cents. Like, it's basically perfect. You don't want someone to sugarcoat it for you. There it is. So if you're asking me, like, is there a technical reason to go to $1 ever? Yeah. I did this in 2024, and I got a lot of, like, hums and haws. Because I said, look, there's technical reasons to do it. I don't know if it's going to happen, and I don't think it's going to happen because I think it's a carrot on a stick. Like, here you go, come get it. But I definitely could see it as a reality of the chart. I'm sorry, that's the easiest move to possibly, that's the easiest thing you could possibly chart. Top to where that chart shift happened leads you to almost exactly $1. That's a gigantic S-curve. So what you're saying is we're doomed. What I'm saying is that for everybody that says this thing's going to like thousands of dollars, there's just as much technical evidence that you could go down. But I think that when you look at the way that they've behaved, it's typically like the carrot on the stick, right? And just like there was a carrot on the stick here where you're trying to get a lot of buy-in, there's probably a lot of carrot on the stick down here as well. You know, I don't think that everything that is negative has to come to fruition. Now, in the last few years, it'd be easy for me to look at this and say, yeah, I think that's going to happen because everything negative has come to fruition. Like everything bad happened. Nothing good happened. Well, yes and no. I still don't see this as an overly negative range. Like I'm just trying to be as objective as possible when I say that and say, I don't think that's the case. But I do think that when you look at this as a waveform schematic, this is the most proper way to see it right here. And I think this makes the most sense. And like, it is middle of the road. It's not going to $1. It's not going to the moon. It's really, in some ways, just kind of rebuying off the floor again, like distributing at that level and then coming back down. Weirdly, and I think it is very weird, that 1961 level is the middle of this range prior. And it does make me wonder, I do have a lot of questions about that area. Like, is this because of what happened in 2020, that's the region? Are we really like not going to break that again? I don't know. Or do we just need to maybe buy back below that level? Like this was a consolidation around a liquidity range like a long time ago that ultimately we wanted to come below there. And that's what this is. This is like a double flush where you're coming up and then driving back down because you've basically bought in enough here that you can drive all the way through, And you look at somebody that has infinite resources, essentially, compared to us. Your BlackRocks and Vanguard, trillions and trillions of dollars at their disposal, and they don't even need to use it all at once. They just have to kind of cycle through these motions. Well, how could they possibly do that if everybody's holding the stock? Because holding doesn't do anything. Like, it doesn't add selling pressure, doesn't add buying pressure. It only does something in regards to a short squeeze when people refuse to, give up their shares during a short squeeze. That's what causes the squeeze to amplify. And it is true, and that's why it worked to some degree on GME and AMC, because if nobody's getting rid of their shares and selling, then how do people cover their short positions, right? They have to either artificially do it or find a way to leverage or blah, blah, blah. And that's a whole long other story, right? We could talk about that for ages. Like, we could go on and on and on about that, right? But I'm like, this to me makes sense. I think when you look at the big picture, this to me makes a lot more sense than what some people are saying, because if you really want to go that high, I do think you could get there eventually, maybe by 2029, if you have something like this happen. Like, I think it's possible. Again, like, considering everything that's happened with the shift value and all that jazz, this is totally possible. This is a feasible outcome, because then you can take this idea here to 2029, the same concept, apply the shift to it, and you can see, like, there it is, right? And this is how you get back to, I think it is the original opening price or something like that of AMC. This is basically how you could get back up long term, or right around there, this original price range. Really goes back to this ledge, and it looks like the ledge from over here, at least for now. I'm just kind of doodling it. I thought that was an important level from like 109 up to 170, that region, and I think that's very likely. But that doesn't happen for like years. This makes more sense to me because you're buying off the bottom in low liquidity. You're spending a really long time building out like a 1-2 punch, and then you just go like a macro economic move. Do I want to sit here and trade this for years and years and years? Probably not. But like, I just don't. But at the same time, this makes a lot of sense to me, as opposed to just going straight up. So could this hit 170 by 2029? Yeah. Could this start a massive build out starting in 2027? Yeah. And I found that was actually pretty similar to what we saw on GME. There was a very strong case for that on GME as well, that could be a possibility. So I think this move is more about that gap at 40, which translates down to like the 1961 region. Maybe the top, again, at 64. Again, that translates to that 19 region as well. For other reasons, that's what I think it's about. I don't think it's about going to the moon. But if we did go high, I'm not going to suggest it goes any higher than here, which is $64. So if you're looking for a repeat and you think it's going to repeat, that's as high as I would put it. And that's by maybe early next year. But if you're looking for what my opinion is about where I actually think it's going to go, I think this has got technical proof, but I don't think it's as strong as the technical proof that this actually is going to sit low and do like an actual build out. Like an M cross here with a 1-2 and then coming back down and doing it again, but smaller. To me, it makes a lot more sense than anything else. It probably wouldn't look like that. It probably would look like this. I think this would have to be a change. It'd have to look somewhat different. So what are we talking about today? We're already down to 3.5%. You know, we've already been they've already taken us down, right? We're done. I'm not particularly worried. I feel like this is a really small piece of a really, 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 really big puzzle. I don't see it as a end all be all move, but I do think that what comes next after whatever downside happens here is not more downside. That's an opinion. Yeah, it's based on a macro setup that I think has been playing out for years, at least 2 years now. And at least from what I can tell, the 2-year cycle does seem to be finished in August. So I don't know why you would wait until after August. Another way to look at this, if you want, I don't think it's necessarily the best way to look at it, but you can do a series of parallels. And I did that on the other chart. I actually hit it and then I put all this other stuff on this chart. Another way to look at it with a lot of simplicity involved, and this is fine. I think it's a fair way to look at it. This is kind of a macro analysis. I'm doing this now because I have a lot of eyes on, right? And I think it's important to just let people know, like, this is what I'm thinking. You know, you can see that daily moving average as well, like right above us. That's another one that wasn't jumped till here. You have the same kind of push against it, and then there's a rejection, and it goes really low for liquidity before rocketing above it. And I didn't mention this, but if you look at this as like a 50-50 swing, you can see it goes right back up to that level that we were just talking about, that it was trying to get back to, which has to do with the 2-year cycle. So that would be consistent with us saying that this moves up towards that level, right, with consistency. I think it's realistic then. But I was saying a minute ago that there's a simpler way to do it, which is to use like a series of parallels. And I kind of had this on here. It looks wrong, looks like broken, because this was on extended trading hours. It wasn't on regular trading hours. But I was doing this before, and what I was trying to illustrate, it works better with extended trading hours. So let me just do it on regular trading hours then. What I was trying to illustrate was like, this is kind of the long-standing creek. It goes back up to like a drop that happened around $13 in September, which again, I've said this a couple times, like I'm not really positive if it's August 22nd. I'm sorry if that now upsets you, versus September 6th, which would be after GME earnings, right? Probably. I just don't know. They're the same little area right here. Not sure which one to count, but I've been saying that, so hopefully you guys hear that. You don't hear me like flip-flopping. I'm not flip-flopping. I'm just telling you it's like a week window, and I don't know which one is which. I know that the split happened on the 22nd or thereabouts. That was the same as that AMC ape thing, and the Judge Zern decision thing all happens around that August time period. There's a hook here, and it doesn't drop till the 6th. It doesn't hit a low till the 11th or something. So, I mean, grain of salt. I guess it could be one of those days. It's possible. But one way to look at it would be like a reversal here of like this hit the top, comes back up, and then breaks out. So like you could see this as like a reversal motion of coming back down and then breaking out, right? And then taking off. And if you take that measurement, and let's say this was a shorted move, this does happen quite a bit. We've talked about it. You can use the gap or you can use the top. It's up to you. I usually use the ledge. I prefer the ledge, but you can use either one. And you go to that bottom. This usually translates to about the middle here. right, from where the breakout typically happens. In this case, it looks too low, which is interesting. If you use the top of the move, it's still like slightly off. It's not quite right. But I've done this like a number of times, right? And it usually translates to about the middle of the move. This is a completely different way of looking at the chart in terms of like what would be happening and why would it be happening, right? Is like a channel-based approach that this is really like investing in this, and this is where ape is right here, right? That this would be investing in this return back. The reason I'm bringing this up is because that motion right there does not have you, again, going to the moon. It doesn't even necessarily have you going to a higher high. It might, but it doesn't necessarily have you going to a higher high than what was back here, right? Which is like 11 something. It went to like 13 in after hours, but I think that's kind of interesting as well, because one way to look at it would be this sort of like dip that then has a retest, right? And ultimately holds strong and goes. And at any rate, one of the things that always occurs to me about this is the walk-in measurement. So I've done this before on the stream. Earnings has already been announced, so it's already been posted. It was a double beat. But I've talked about this before. If you use the drop-down level here, this is basically just like a 50% retrace, right? Like after it drops down and does the slump, it comes back up and it retraces like 50%. And you can see that this is sort of built out around where that spring is eventually. But one of the things that also strikes me as quite interesting is if you use the drop ledge, and I'm using where the gap is, and you go to like where the liquid center is, and I have to do it right because otherwise I mess it up. This level ends up being like the same. It's like a quarter system, and that's where that bottom is to where that drop is approximately. And I find that to be pretty interesting because there's another oddity here, which is that if you look at them, what's shifted afterwards, this is like the same value. So it's almost like they have like they've created in an institutional terms, I don't know what you call it, like a bracket, right? Like we're bracketing around levels. This probably comes from back here. Some of you guys are like, well, that's just this level, right? Yeah, I know. I'm aware that that's happening, but I'm telling you, like the 50-50 is really clean. So once it goes like 50% around the opposite side, it stops and goes sideways. But then the shift is this. This is like the extra. And it's almost like, why even do that, right? Why not go right back up and test the top? This is a big part of the reason why I thought we were going to go all the way up to 13. Well, I wouldn't say October. I'd say you have to be careful. First of all, I would say January or February is probably much safer because you're going to be looking at, yeah, if August is the breakout, it's going to be by then. But it's not a guarantee because you could go into a slump period, which I talked about earlier. You should be making your own decisions, by the way, not deciding based on what I'm saying. But what I'm saying here is like this shift is really interesting because it's basically like taking all of this valuation and shifting it down by that percentage, and it builds out so that this creates like a bigger hook. This is like a bigger explosive move. It would have been possible if you saw this previously, it totally would have been possible if this had come back down to say, well, I think it's going to back test here and then go low. But instead it goes low first, and this is significant. It goes low first, then comes up. That's bullish because instead of getting that liquidity test and moving on, they went ahead and went to do the strength test first and then they buy back in by staying up above. That's part of the reason why I thought this was such a bullish setup previously, is it didn't do the back test here. There's no hook value. It stops and drops. This is basically the same reason why I thought something was wrong here, because it didn't come back up all the way, which I was like, this is really odd for them to leave that open and drop again. It's like the same principle, essentially. So you have a drop down right here, right? So this comes down and it never comes back to check that level. So it's the same idea, right? Instead you get this like weird kind of sideways action here, and there's no it's like just like here, like there's no clear evidence of like a backup until this point. This did have a big move up, but it could have been possible, it should have been possible then to expect this to come back up at some point. Like, why not come back and retest that middle liquidity level? Like we were just talking about that down here. Like, why not do that backup and then drop down and do continuation? And instead you don't get that. You get a drag down first, and then it creates this massive move up. So people have repeatedly asked me if I called this out, and I said I did. There was more than one reason for it, but this was a big part of it because it never came back up here. And I had thought it was going to come up to at least like 14. This should come up to this gap level here at the bottom, maybe $14 to $16, and it never did. And it just stayed low and it dropped down. I was like, if it keeps going this way, it's just going to have one big move, because it's typically what happens in these setups, is that you eventually get to this one giant move, blah, 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 so on and so forth. Why can't that happen again on a macro picture? Well, it can. I'm making a soft argument for it right now. If you don't catch what I'm following, if you're not following what I'm throwing out there, this region on the whole is similar to this, albeit a much bigger picture. So again, you might be saying, well, doesn't that give us evidence that this thing could just fly? Well, yeah, I mean, it does, because it hasn't ever come back to this level still. But I think that you'd have to still look at that as like okay, well, while that's true, you have to consider that the chart shift is still there. I'm not trying to go in circles. I'm just showing you like different ways to approach the same information, right? This is basically the different ways to show the same information. I don't think any of them came up high enough. And I mean, they definitely have left multiple gaps here that just were not addressed, even in the opening value. So it's very odd to me, like just leaving that open. But this is just another piece of the same kind of composite evidence, if you will, of all the different things together. So I look at it as, yeah, there's certainly a reasonable explanation, of like a 50% backup here and this, that, and the other. I think when you go to like August is like right up here, you can see that from there to the bottom, if you use the shift values, not the final value here, that actually equates to like a 50% retrace. So it did have a retrace there, but it never came back up to the top, which is interesting. Not really. So I think that's kind of fascinating. Maybe my shift value is wrong and it really did come back to the top. I don't know. I don't think it is. But it's possible, I suppose, that that's the case. I don't think it is, but I'm gonna leave that hanging because I couldn't tell you. But like that to me makes sense. All right, so maybe it was like a 50% retracement on the downside. This is like an S curve and it pops. So I could see somebody making like a similar argument here that if that's the case, why wouldn't we just have like a macro, 50% retracement? And it has to do again with like systematically, like where are we in the scheme of things? $1.80, sure, that works. And then going all the way back up to 27. I think that's a simpler way to do it. And I think people probably might look at that and say that makes it a little bit easier for me to digest. If it hits $1.80, it just has a 50% retracement. It's not that different from what we're suggesting, though. It may seem like really different, but it's really not. If you look at this in like the grand scheme of things and you think that something like that happens, you're probably not inclined as much to worry about August as you would be about December, because the bigger picture, you don't really care what happens in the middle. This could happen in August, sure, but it could also stay pretty low. And that's what I was saying earlier is like, yeah, if you full port in October, you could be great, but you could also be in a bad spot if it just kind of settles with this kind of emotion going into December. And I could see people making that argument. But then the secondary problem with that, of course, is that what I was just saying a minute ago. Not to just beat on the same drum over and over again. But that the shift definitely happened. And you also have this issue of like, while that's true, there was an early reaction here that goes quite high. It's like you're kind of guessing then as to what that is. Just an auto reaction. But it doesn't hold up high the whole time. Now we're back down to lows. It's a lot more similar to what I have here on a macro accumulation, sure, but you still have this creek to contend with. So if you think it's going to go to 27, you'd probably be inclined to think this goes to $1.80, pumps up to like 5, holds above maybe that 316 level like we were expecting here, and then chops into January. This is really where I think Stockfather was talking about like a longer term phase B or something, and then it goes all the way up to 27 or something around there, around I don't know, around February. The truth is, like, I don't really care. Like, I could find evidence for whatever I need to find evidence for. If you want to have that happen, sure, like, we can make it work with certain kinds of pieces of evidence. Like, I could take certain things and just, like, drop those measurements on here and say, that's where it's going to go, you know, or this is why it's going to do that, or this is why it's going to do that. At the end of the day, if you use, like, a really basic function here of like parallels, which is I think probably appropriate, you can see that this has been built since ape. Even before then this was used. This was built as the resistance right there. So just even conservatively, whether it goes down to 180 or it just breaks out here at 360, which is still again the better buy-in because we don't know how low it goes, no matter what happens, you would still say like, well, it probably doesn't go much above here, at least for now. If it just goes straight up, you know, as the crow flies, that seems reasonable. That would be like a retrace back up. And there was a way, I think there's a way to do that. I can't, I do a lot of things, maybe too much, to try to understand price movement at times. I don't think that this one particularly translates as well in the recent, like when you're going back in time and looking at that. I looked at the parallels, and I think the on balance example was a better example. But yeah, if you use like the gap from way back here when it first dropped into this like LSPY, that makes sense. And then if you take a look at that and you compare it to which doesn't seem to apply right here. Like, it's really confusing because it's not the same. Like, this would be that range here, and there's no, except for that original drop. So it's kind of backwards. Again, chart shift-wise, that's probably the equivalent of, like, dropping it down to this low and suggesting that's the one. But that is also on the chart. You can use that one as well. That one's fine. I've done this a couple different times, so I know it works. But the setup here would then say like, yeah, that was similar. You have a similar kind of build out. It's just a series of parallels. Like, keep it simple, right? You could just say that. I don't know if this would make me feel any better about it, because in in reality, really all this does is just make me think like, well, it could go really low. On the big picture, because you have a channel. I'm not looking at anything else. I'm not looking at indicators, but you just have like a simple channel build out. This is the creek that's currently being checked. Like, it's back testing this region as it's coming down, but it did dip below it. And I mean, like previously when this happened, it dipped below and then it comes up and it comes back down to that level again, to that marker, but we don't know exactly where that marker is. So it's like, that's not very helpful, is it? So I was just saying a minute ago, like, I don't know where it is here. But I would say this actually makes me feel like it's more likely it comes down, because then you can see it dropping down to like, shoot, like $1 or something, right? Which is, I think, again, where I think Stockfather was hanging his hat on, like, it dropping really low, like really, really low. I'm of the opinion that I don't think that's going to happen, because I think that 316 to 318 represents something of a anchoring on the bottom. And I don't see it as likely, anyways, that that's going to drop all the way down there. But the good news is, I suppose if it did do something like that, we would very likely see a really, really, really big pop back to the top. Potentially then giving us a propulsion significantly higher that goes up to like 27 or something instead of just 1961. I think you could probably make a stronger argument for like a macro spring move, because then when you look back at this, you're like, yeah, that's really far out there, sure, but it does give you like a really huge kind of a slingshot move around the $4 top. Just depends. Well, we don't have evidence that it's going to do that, but we kind of do. I'm making multiple cases here, because this does give you evidence that this was a 50% marker right here. Like, it drags away from it and then it pushes up, and it ultimately is aiming for like a 50-50 swing. It goes way beyond in the major squeeze event that happened in terms of the buy button removal. But ultimately, like, that is like a halfway point for this move to come back up. So it's a question of like, where do you think it's going to go? If you're like me and you think, well, I don't actually believe it necessarily has to go that high in one motion, then I'm inclined to think that it's very possible that we don't see anything more than like $8 to $9. Then I don't think it needs to go that low, because I don't think it needs more than $8 to $9 to make a jump here and to have like a buyback in. I already drew my charts multiple times today, but like I made that case earlier. I was saying I don't really think it needs to do that. But if you think it has to come up to like $15, it's a difficult one. I think you have to make a stronger case for a bigger spring. In theory, it's a liquidity question of like buy-in versus results, cause and effect. And I don't think it's that complex. I genuinely do think it's often like 50-50. It sounds really like elementary, but like I genuinely think if you think the first move is huge and it goes up to that area all at once, you're kind of saying that, yeah, it's more likely it's going to go really low for a dip. In theory. Like, there you go. Now you can get above the top, right? But you have to go down to like near $1.20 to get there. That's really low, isn't it? Mm-hmm. Yes, it is. Very low. So if you full port into like October and then you come back and you say it's my fault, like, I'm not going to apologize. I'm just telling you right now. I'm going to say, I'm sorry that you did that. But I'm warning you guys that this move right here today, the move has to show that jump, and it has to be a real jump over that 350 area. And until that happens, I don't think this is going anywhere. And it can go up there without jumping it. It could be a distribution along that top again. You cannot ship it just yet, you know? As much as I want to be right about the August 22nd thing, that is way too on the nose. Like, it's way too close. I would never believe anybody else. I mean, I just wouldn't. If I heard somebody tell me it's going to run on a specific date, I would say, yeah, I'm not going to believe that, but I'm going to keep in mind why they're saying that. This is how I would approach it. I'm going to keep in mind why they're suggesting that because of this 2-year cycle business. And then I'm going to like evaluate other options and decide what's safest. But I would never ever look at somebody else in this world of YouTubers and say, yeah, they said it's August 22nd, it's going to the moon. Like they're right. Look, man, it happens. Sometimes people call stuff out. I've called out a lot of the numbers, but I've also been wrong about dates plenty of times, and I would never ever buy if somebody else said that. So I can never recommend anybody doing that because I say something. That's ridiculous. I'm just saying there's a strong sense of parallel. There's a strong sense of connection. I already illustrated that earlier in the stream. It's very strong. It really is. But you can't deny that this is possible. It's just not, it's not a good idea. And we don't know what's going to happen with GME. We don't know what's going to happen really with an earnings call. Earnings double beat, yeah. But we don't know what we don't know. If this ends up being something more radical, I think we could see a massive sell down. It's possible. It doesn't have to be $1.20. It could be $1.80. It could be $2.44. Like it could be right underneath that previous low. It could be right underneath 230 something at like 236. But that whole area is game for me. I'm like, yeah, any of that would be fine. As long as it has that move and then recovers back above the floor in a spring motion, in that strength test motion, I can't really complain. And then ultimately, I'm really looking for that longer term move anyways, you know. So what I was saying is like, yeah, I get where people are going up with that marking of, yeah, it has to go really high. But if you go to like 180, for example, here, and let's say you hit the 180 mark here and then it rebounds, that's right 50-50 around 4. It gets you to that mark. You don't have to go beyond it. It's at $9. But that's what I'm trying to say. Like, that works for me. Like, I think that's fine. It still gets you over the creek. It's a really smart range. Like, this is the one we were talking about not a few minutes ago. This is no different. Like, this is fine. I don't feel like we need to have that massive dip. So I'm not of the opinion that it's going to necessarily go to the moon. So I'm also not of the opinion that, like, that high to $27 or $40 or $60. I think it could probably manage to stay low at like 20, which means that this move doesn't need to be that big. It can be a lot more controlled. You don't need some macro huge spring motion. You can get away with something a lot lighter. That's the difference between maybe what's speculative and what's not here, is really a matter of liquidity and what your opinion is on what is needed versus what is not needed. You know, some people are going to say again that this is not high enough, like it's not good enough. I look at this and I'm like, it's kind of where I imagine it going, because I think they're going to go for that $6 mark on the breakout. I don't think they're going to go for $11 on the breakout. I just don't. For other reasons. And then also, I think it makes sense because this is a liquidity zone that hasn't traded yet, so it makes sense to trade off the top of that. That's different than what was here because you did trade all along the top. So there was really already a bunch of trading that had happened here. So you're trading like right above there. And that's the same thing. We're trading like right above it, like right there, you know. I don't think you need to trade way up here off this top, which is different. Just different. Why not? That would be the same. It should be up there. I'm not saying it can't be. Maybe, again, maybe I'm wrong and this does go way up here and then it stays pretty high. But if it does something like that, it'd have to be a situation of like, there's some kind of a deep spring, and then this goes way beyond where you would expect it to go, hits the top, and then reaccumulates higher here, like across from that pattern, and ultimately breaks out. This is kind of what I had early on, like way over here in December. But then that's like a really big breakout. Who knows where that goes beyond what we've already said, 27, 60 something. I just don't like that. And I mean, I've already said it too many times, so I'm kind of repeating myself now. But I don't like it for a number of reasons. But this is kind of the main, still like my main reason. If I had to pick one thing, it's that I don't see this as strong of a trajectory. It seems like the operators are setting it up for a wider berth, so to speak. You have a lot more space here, but it's like steeper, like really steep. So there's this sense in which you're kind of pulling away from maybe the natural, like this direction is pulling away from like what would be more natural in the movement, the direction that's implemented in the beginning. And the whole market during that COVID rally started in September. It starts here, it starts building out and goes up to an all-time high by there. And we went kind of the opposite way to start, went down. We were already doing that. Like we're already going really low. Remember, the market starts building out and we're way behind. If you look at the greater picture, we're not even close, right? Like SPY and all that jazz. And I could talk about tariffs and junk too, because that obviously happened. But this sell down and the reaction rally, the rally that happened took it all the way back to those previous tops. You go to like the S&P 500 and you look at where we are now, we're above the previous tops, right? Got a green on these things. And somebody said something about UNH. I think it's still going to go. I don't think it's too late for this one. I'm curious about this gap here, but I don't think we're even close to where it's going to go to on a bigger reaction. But again, space it out. Give yourself a couple months because it could take that long. And it may be one of those things that takes till January or something. But if you go back to where this broke down, this was in February 2025, and there's another top right here in December. And that makes sense. December 2024 for AMC was back here. So when you look at that previous top, that's really what's being recaptured the market over. I'm not saying it's one-to-one with COVID, but if you think about it, it's like a huge reactionary move that has this massive spike down right at the end that then V-shape recovers, and that's similar. COVID had a similar like extension up at the top before March, and then it dived in 2020 and goes into this like massive drop. And this is similar and not exactly the same. I can't say that enough. They're not exactly the same. But this December period is the previous top. And look at the market's already like above it. And I've talked about, there's a possibility it comes back to this area. It's already done it twice to near that top and that wave. There's another chart for another day. But COVID was similar to that. It had that V-shaped recovery. And it's pretty far. You got to zoom out a little bit, go back. But it's a similar motion, You get these kind of waves, and then it breaks out. And if you look at where it is by June, and you look at where it was back here, this is November into January 2020. There's a massive dump. Comes back up. And by September, this is already back up. And then this is the period of time into November and then January where AMC's like starts booking it, but it had gone really low. It stayed really far down, never recovered. So AMC during this time period from March all the way through January is like down here. The market's already back to where the top is. By comparison, I would suggest there's a similar phenomenon going on right now where it's very evident anyways that this level that we've rejected off of in 2024 represents our current like liquidity top. And December right here, the whole market goes down in a corrective phase, but by this time period, which is, April, that's where the final dumps happen because of tariff news, or at least that's the way that the market presents it, timing-wise. This is where you have that reaction from the market. It's already come back up to the top. I mean, it's already fully recovered, and now it's like chopping a bit. And AMC is still like doing its thing down low. It's not even budged. I feel like there's a reason for that beyond just, it's not just correlation. I think it really is in some part causation, because one of the things that we talk about and we try to keep this in the forefront is liquidity. And markets that are more liquid tend to be more bullish markets, because on the whole, our markets are bullish. Like on the whole. Not every stock is the same. But if you look at the entirety of the market, it's bullish. And anytime you increase liquidity with like a rate cut or something like that, which brings more money into people's pockets, or like a pandemic, which brings more money into people's pockets all of a sudden with nothing to do with that money, right? The liquid often goes into the market, and that could be in a buy-in, for example. So what I look at here is I'm like, all right, this is already recovered, and it may still have some sideways for sure. It's not impossible, especially in the next couple months. I would not be surprised to see us kind of stagnate and go sideways for a couple months. I still think that on the whole, like this recovery is pretty much finished, and you have the possibility now to have basically a big S curve up and keep going. It's interesting to me, again, to see where that is in combination with what happened in COVID. Not just because of, it's just because of this timing, it's like random or something. Because notice that like once this finally takes off, and I know we're using very different times and examples, and some people are gonna be like, well, the market's not facing this or that or the other like it was then, or maybe it's worse off, maybe it's better off. There's different arguments. Not saying that, but I do think liquidity is a really, really interesting question, because once this passes above this top here, this is kind of that middle S curve, right? For using like that same idea, if you're using this concept of like, well, it bought back in, it's now back where it was, so you now have the option to start a new bull market. That's the 50-50. That's really hard to argue against, because it's like, it's right there. Weirdly enough, that's like the halfway point. It happens earlier. You can see this takes longer. Where does AMC and GME take off? Right here. Right after it jumps over. So it's like the upper echelon of this move. That last percentage right there, there's a huge buy-in. And this is where we see, after a long period of time, right? I'm not going to go into heavy detail on it, but this is where we see this massive pump. And ultimately, weirdly, perhaps even AMC during this time period, I know it's not exactly the same, guys, so you don't shoot the messenger here. I'm just trying to illustrate a point, because they're not one-to-one price-wise, but I'm just showing you based on like lows and highs in that region. It is fascinating to me that this area, which doesn't seem to have that much significance in SPY, but it is like this breakout zone. I do wonder if it's just a simple question of liquidity. Like, you have more cash on hand now from people to buy, and they buy it up because of this full recovery, like this move. And I do wonder about the rest of this. Are we already in like a sell phase? You know, the latter half of this, I don't think that it's unwise to say that probably that's true, because then look at where we come back to, that institutions are already kind of selling off and getting ready. And then like, look at what happens during that retracement. It comes right back down to that level again. So I don't like the idea that everything that is correlating has to be one-to-one, like a causation, I mean, like it has to be a cause for AMC to go or something like that. But it would not surprise me at all if the shift in liquidity is really why this happened when it happened. Like, all right, we're doing disbursement basically. We're taking our money out of some of the bigger tickers here because we're going to come back here later, so it doesn't matter. Like everything from this point up is superfluous. It's just extra. Think about that. Because if you didn't buy here in, let's say you were like selling your shares, but you did want to buy through this range, you're going to get to do it again anyways. Like you're going to buy off this level here anyways. So it's like, it's really odd because if you look at it from that point of view, it's like they didn't miss anything. This idea of like disbursement, like let's let everybody else catch up. Well, maybe it seems a little silly. Like you don't have to catch them up, right? But it is fascinating to look at that now in retrospect and say, you know, by the time AMC's done and it's dropping, this is really where you have that massive buy-in after it's kind of breached the top. Look at where we are now. I wonder if we could do something similar. That'd be interesting to try. But it's fascinating to me because I'm like, even if they were buying, maybe they were buying less. It's possible, and they were selling previous shares, maybe still averaging in with newer shares, like long term. It's just a thought. It is really fascinating to me that like that junction is where you have the squeeze. So what you're saying is, Booksy, I don't know what I'm saying. I'm not sure. I did this chart like 3 different ways, and I like this one. I really do. I guess what I'm saying is that if that's true, you know, in theory, this may not be squeeze time because you'd be like, well, it's not going to squeeze then until they're above this widening, right? Well, I don't know. I mean, it's a question of like timing, right? Because it's really more about liquidity. Like if you're already above that top, you're consolidating along the top and then you push up a little further, you're kind of done. I mean, if it were 1-to-1 with COVID, you would expect that to be where the squeeze is. It could be like a January thing, right? Because this could be a stagnation period from August. And by the way, this does run up hard from August to September. So you could make an argument that like, well, August to November is going to be crap for the whole market. And then by the time it hits January, you're going to be breaking out. That is essentially like a 1-to-1 with COVID, though. I mean, that's a really big, broad kind of, yeah, that's where it would be. So you would say that August is going to be a really bullish month. And I don't know how high it goes, but just based on this, you would say that it goes up to almost 700. And then October to November will be crap, sideways, and then it would be breaking that come January at like 750. And this is really where you'd have like a really big AMC GME squeeze again because liquidity now is shifting gears, and this is like the new level. And again, I think this is a bit different because I think we'd have to look back and just see where those markers are. But this would be like the new level at the top around like 750 or something like that. Not impossible. I mean, if you look at the 50-50 here, if that is the middle zone and it goes off the previous top, it should be 770s, which is really high. That's actually higher than I expected, but it'd be like up here. But this would take probably a longer time. I don't know. I don't know if I like that one very much. It's kind of weak by comparison to the COVID one. It implies less of a break above the top here. And that could be a problem because in this example, there's a clear like 1-2 that gets you way above this top in that timing. This one does not. Unless you went like immediately or sooner than later, this does not. This gets you up to that top, but it doesn't actually breach the widening almost at all, which does give you a case for like a longer term, maybe a longer term kind of downtrend period since you didn't actually break the widening, or sideways period. So you come back to like 610, which is that creek level too, by like mid 2027. I mean, that's a very literal like 1-to-1 kind of example. And then that just kind of leads me to like the next question, which is, does that mean they're already in that disbursement period? Since this is not higher up, you're not going to get significantly higher because the top here is 610, the bottom is 470. So therefore, the highest you could get here is something like, if it's the same proportionally, the highest you could get here is like 780 on the similar move. Does that mean it's already like doing this and it's about to go in August? And maybe September, October are a little more bullish than usual. They're just kind of slower months. That's sort of what I was at. It's like, well, maybe they're just kind of like choppy. You don't get this big swing up and down. They just kind of come up and settle and go. That's a little different. But you can definitely see why that would be an issue. Because I know I've got a lot of little markers on here. I get that it's confusing. It's just a fib fan. It's not, that's the main reason why this looks super messy. But there are my little markers on here. If this is enough, it, in theory, could break up and just kind of go. And you might have this kind of moment of sideways, but it would just kind of slowly chop after hitting that top. That's what happened in COVID. It kind of slowed down after it got above the top. This would support a concept of like disbursement again, that like somewhere right here in September there is actually a first squeeze, and then way over here later near January there's a second squeeze. But then by the time you hit March, you're in like a sell down period again. So AMC during this time does indeed have a squeeze. It's about to happen. Happens here, and then it goes sideways, happens again in January. So this is just like a whole nother set of tools, I guess. The only reason I would say that is because like technically this is already broken above the previous top. So to me, I'm looking at it like you could call and say like, well, I think it's still not done with this. Like now it's going to do the same thing. I think it's going to be September through October is going to be like this. Yeah, but what's different is kind of obvious here, which is that they're not really the same in that liquidity, because they don't have the I'll just use a line. Like, see, that already happened. This is a 50-50 here. Actually goes from that bottom, not the top. So it goes from there. But it's kind of like saying this bottom right here, or something similar to that, or like some middle range. It's not like saying the tippy top. Like that's actually your 50% mark. I wonder if we can find other evidence for that. I can't really see any evidence for it, but I don't know. This is the daily. This is where it pushed up and it backed up on the daily, and it jumps over that line. Maybe that's all that we need. It did jump the daily right here. This is really tiny. That could be it. There's a backup there on the RSI, and then it pushes again. Maybe it's not even 750. It's 730. So this is where there's a widening that begins. This is where it kind of starts right here. Well, I mean, that's pretty close to like an average trajectory there. 2026. So if I look at this, like, it could take as much time as it needs. This is February 2026 right there. That's pretty close. I'm going from this top here Kind of ignoring these two tops. That's a lot steeper. I get that. But then I'm looking at that final hook. I think I did the same thing on this one. I went from like the first one through that motion. This is interesting. It does go beyond it. But anyways, I digress. I wonder where this goes eventually. If this is like a kind of meandering right now, but I'm curious. Hold on. Let me see. Yeah, that's interesting. To see it pushing up once, twice. I don't know. It's curious. See, this never comes back down to that level again. This never comes back to like 590 or something in this example. Instead, it goes to where it broke out here and started like a new liquidity zone because it got above that widening. I'm going to get rid of this now. Now I kind of wonder if it's just that line. I'm just being a little too... Doesn't matter. The reason that's important, if you're kind of like lost and you're like, what the heck are you doing, dude? I didn't ask for this. Well, this is where you have the potential. Like, this is where we see November especially going into January. This is where you see some of the most massive dumps happening on AMC. It's really fascinating because that's the big drop zone right here, you know. And you look at 2024, excuse me, if you look at 2020, you look at November, the end of November into January is that big dump. But if you look at anywhere from September on, it's all kind of down. SPY is not really down, but it is starting to chop in that time period. It's more stagnant. It starts right there. That November 30th, though, that's like the little zone. It's so crazy to me. That's like the little zone that right there that's then used as a floor. Again, like, so if you were dispersing your funds and you were selling here on the way up, but you started right here, this is kind of like a cycle. You can come right back to that level. You could be trading those funds out for like a small cap meme movement and jumping on board, and you can always get back in later. You're going to come back down there. I don't know how you could have known for sure unless you were some of the big dog operators and you were just kind of paying attention. It looks like that might be happening already, though, like right there. Let's see, what's going on with the RSI? You're getting a widening and the RSI dips down. It really dips down pretty early. This widening was already happening there. And then it's like a hook motion. That's so bizarre. And then it just rallies and goes above the top. It doesn't stop until it hits the peak. The RSI, the daily, is not very helpful because it just stays elevated after that point. But I think that's the strength test right there. It's like going back to see if we're going to go low, if there's chinks in the market. And then you can see it like pretty much doesn't come below 50 again. I mean, it comes below, but that's like the new buy zone. So is this happening right now? Is that what we're talking about? Are we thinking that this is the August move right here? And that's why in August 22nd, if that happens, the question is this happening? Like, is this the August move? And is that why, so end of August, there's two questions here, but I'm going to just ask. So end of August to early September. That would make sense. That would make sense with the timing. So like right now, the question is, do you have sort of a same thing but like smaller scale? Because you definitely have the same kind of build down. Shoot, look at that. Look at that build down right here. Tell me you don't see that. Look at this and check out that same motion right there. Exact same thing. I don't know. I mean, it's really similar. There's a lot of the same kind of basic principles in that walk down. This one actually has extra on the end. Maybe that's not the best example. I have to go look at it more closely. But that drop. So I guess my question is, I wonder if this disbursement's already happening. It's going to start happening now into August. So you run up into August, and there is a lull, but the lull is really this chop through September, October, where you start seeing all these other tickers start going crazy. So this is it, and then it goes up, and it breaks out here, and you do get a lull period through like October and November, but it's not down here like we would maybe expect it to be, but it's like kind of up high. I don't know. Maybe it's not that dramatic. I'm trying to like imagine it, and I'm like, it doesn't have to be that dramatic. It could be pretty chill. It could be like the market just trying to struggle to like get above that top. A lot of sellers, and then I don't know, it doesn't seem very high, does it? Then you just kind of go up. But that's like, it's pretty close. I don't know. That's a weird example. Then again, you are using like a weird line, Booksy. You're using like this trajectory marker and not the actual creek. The actual creek marker is like right here. That's the last creek. So if you're looking at the widening, this looks fine. If you're looking at the creek, this disbursement is happening now. That's where the creek is. It's pretty high up there. So it's already occurring. What I mean by that is that if you look at where it actually broke out, that's where it happened. This is other stuff. This is just like trajectory motion. It's a bigger trend, but I wonder if I'm like overthinking that point. Because like this is already topped off here. There's not really a one-to-one example because this is a very different time. This is kind of the only one I can think of. Maybe this guy, if you think this is like early days. This could be like another version of it with like a worse drop that's going to happen. Where we're going into like a weaker corrective phase. And then we end up with a big pump and dump later. That wouldn't surprise me too much. That'd be pretty dramatic. But it'd be similar, you know? Because then it'd just be like, well, it's not that different, but you're just going into a corrective phase. So this does break out, and then it kind of slumps. Because remember the second half of the S-curve on this was pretty slow. It's not really a very good S-curve. Like if you had been measuring this at the time and you thought it was at a particular trajectory, you would think this is going to go up by April. Because it definitely has like a very steep motion. It's extremely fast, maybe even faster than that. You probably think it's supposed to be up by this point. And instead it's only like barely over the top. And the rest of the trajectory is extremely slow. It's like, again, dwindling trajectory here by comparison. So this is like a very different move on the second half. So maybe we're seeing something similar where like it looks like it should be going really fast, but it's not going to. Instead, it's only going to go, yeah, it's like, it looks like it should be done by August. This would explain why I got so many really wild trajectories on like Tesla and stuff for August 15th in that area. Ah, look at that. Disbursement. I still think August is really an attractive day then. Month, I mean. Yeah, because like that trajectory is ridiculously steep. It looks like it should be going up into August 22nd. Do you not see that connection there? And then the same thing here. It looked like it should have been going up into this date. And this is actually when the squeeze occurs right there in January. So there's a shift. Instead of the S-curve finishing, and that's definitely the trajectory of it, instead of it finishing with like some kind of a massive push by that date in January, it actually settles a bit higher into that date, and this is where you have the squeeze. I wonder if that's all there is to it. I don't know if I spelt that right. So instead of the S-curve doing what, if you measured an S-curve, you would have expected this. Instead, you get a disbursement here once it gets to the top. And then the rest of this, I don't know. Maybe it just follows like the normal buying trajectory from before, which is what it looks like. It's not like out of nowhere. So that's right here. This is the normal buying trajectory from before. That kind of makes sense. Although it's still like low. I don't know. This is almost like the halfway point. Almost. It's like the halfway point towards the top comes after that. Like that's actually the halfway point, not the end. So we've got some reason to believe this is actually quite right. At least the structure of it's the same. The only thing I can't say for sure is whether that trajectory of buying is correct, but it looks right to me. So we'll just have to kind of leave it at that. So I'm thinking that's right. I think 590 is like the halfway point. This is not a move that's based on a huge amount of strength. This is already probably in disbursement then, a disbursement period. And the expectation is that it's going to go up because you can see it on the chart. It looks like it's going to go up to, I don't know, I keep messing with that number. It's really close. It's really close. So you think it's going to go up really far. It could. I mean, it's not impossible. I could be wrong about the whole thing, I guess. Because if that ends up being like this, if I'm wrong, this ends up doing this sideways thing, and we're kind of back to where we were before. But if I'm right, so that would look like just widening here and then slowly building out. But if I'm right about it, I think that you would expect there to be sort of like a slower, like, yeah, this pops. I guess we'd have to go back. Man, this is hard. It's lunchtime. I think people are dipping out, and that's fine. I'm probably going to have to dip out too, but I'm looking at this trying to figure out where that. There's a widening period right here. It kind of brackets the whole thing. And then it moves up and it follows the trajectory. So there was a secondary widening. Up, down, up, down. These drops are kind of severe. And then probably September 16th. I think Jackson Hole, that thing that they do is on the 20th, so that'd probably be a down. And then I think the rally goes into rate cuts. It's already priced in. And then we just start like going up again like this. So yeah, I think we're right. I think we're right about disbursement as possibly already happening. And then later, this time period is all kind of superfluous. It's the same deal. All of this is kind of extra. So the market's buying in on the hype of rate cuts because it's finally some like quote unquote good news, right? That's what people would see it. But more than likely, it's already in like a downward selling phase. And this does get you to a high. This is why we see across the market of February 2026 up into March. It looks like a high zone. This would make the most sense to me because that across the market has been pretty universal. Like I've seen a lot of that same picture. But then it does demand that like you probably are going to end up coming back down later. And this is more than likely what has to be tested at 600 down to maybe, again, slightly below 600. And if that holds up, then I think you could have another rally. And if it doesn't, then I think you're dead. But that would be the second year, whole second year, 2026. It's kind of like bleh. It looks a lot like a repeat of this, but it is consistently how we've been trading. So that's the same thing you see here and then there. So I think it's not that different. I could see that. It's interesting. I mean, the other alternative was a lot less fun, which was basically like you could be in like a similar situation where it's not actually done diving. That's what happened in COVID. It was like there was already like a bunch of signs that it was going to come down, but it would have been really easy to ignore it. And it did drop really hard. There'd have to be some reason for that beyond just conventional technicals, but that's kind of the alternative, unfortunately, because there's not really much else there, or at least locally, to go off of. I don't think we're going to see another COVID event, but this seems more realistic. And if you broke down over time, it could still break down, but then if you did it over time, it could be like a slow burn. This is what I found on that wave that was versus going back up again. Sorry. This is what I found on that wave that I thought was kind of interesting. Is that wave is pretty mathematically correct, and there was a lot of this, that, and the other, but it would be a very wide wave. I think it goes out to like 2030 or something. I don't know how right that is, but that doesn't really matter to me either. That's just theory. I really don't care about that far out right now. Look, I don't want to be a broken record any more than I have been today, but I do think that if you look at this holistically, there's a sense in which there is some kind of a continuity here. I don't feel like this is that controversial. I think the the problem with this kind of stuff, and it's always going to be the problem, is that it requires some amount of guesswork because I can't really tell based on what I'm seeing, like who's doing what, you know. Do I think that it's likely that the earnings are going to be good and keep beating and this market's going to rise on like AI stuff and then a rate cut possibly? Yeah, and that all of that makes sense as to why this could then kind of bring about this as a self-fulfilling prophecy of sorts. But I also think that you kind of got to take it with a grain of salt, like anything, because this is just sort of an idea. And really, nobody knows exactly what it's going to look like. The technicals are set up very similar to what we saw in the COVID recovery. That's why I'm using that. And it would suggest that during this period, you're going to see the market kind of peak out a little bit into August, but then really doesn't go until after. And it's this disbursement idea that, if you don't know what I'm talking about, is this idea that like money moves from large caps to small caps, and that you start seeing that trickle down effect because smart money is kind of taking profits, and they're really, in this case, they were building a range probably, and that liquidity that comes out from these stocks in this low kind of depressive period in the middle where they're selling off and starting to sell into the top is being poured into other run-ups for tickers that are now like bargain bin prices. Like AMC was bargain bin price here, right? So it's like if you're trading, this is not complex. From here on out, yeah, you could trade this and you'd make, another 24%, or you could take some of that money out of this while it's going up, take some of your profits, all profit now. If you bought below 338, all of that's profit, Then you can take all of that money that you're profiting and put it into something else that's running up, that's running thousands of percent. You're probably going to do that. And there was a bargain bin here, but then when you get to the squeeze, it was still, or when you get to the second squeeze in June, it was still really low. It was like, it would have been only halfway up its move. By comparison, that would have been like here. So to me, I'm like, yeah, it's not, it sounds a little, I mean, it is speculative for sure, but I do think that makes a lot of sense. Money-wise, just smart money-wise, big money-wise, like why not? While this is going up, you're taking a lot of that profit off the table because you're going to come back down. You know that you're going to come back down. If you know that, then you're not going to worry about these shares because you're about to lose them. You have to assume that institutional traders are doing the opposite in these cases, like that they're already selling down. They're not just selling over here, which seems obvious to many, like profit taking, but they're already selling into weak hands here. And it could be other institutions, it could be retail traders, but they're already doing that. So this is all like profit taking season. And it makes sense then why that would cause maybe disbursement squeezes to happen in the rest of the market. I don't know. It's fascinating to think about. And then when do they take their money off the table? If you think about it like as a simple bar chart like this, when do they take their money off the table for AMC? From January, they're taking profits from June all the way to January. which is when AMC finally like dumps off a cliff. Now they're taking money back off the table. Not everybody. I mean, some people were buying in on the hype, but now they're taking money back off the table here. AMC sells off. What an easy way to make some profit during that top period, and then you've got money now to put back into whatever else during this window of time. It's kind of interesting to think about. And you can short AMC and do whatever you want, but and GME for that matter. So this is like a micro version of that in some ways. It's like I guess the presumption here, if we're right, would be that this is going to go up in August and then go up again. I wonder if it ends up going up before January. Like, I wonder if it goes up in like November, you know? Like we're so stuck on this January, but like August is a weird month. I wonder if they're going to give it a window, and by the time this is at highs come February, March, AMC's already selling off. I've thought about that before. I've said it a few times that AMC may already be in like a sell down period before then. I've never really thought about when that would happen. I don't know. So let's say this runs August to September. It's like a 12-day period or something. It's somewhere up here. It doesn't matter really to me, but it's somewhere up here, okay, in this area. And then afterwards, it goes up again, but it goes up before the market does. And let's say like by March, it's going to start selling down again. So in theory, it needs to be finished. Sort of makes sense because this one drops out here at the edge. This is where it's done. It's not at the peak anymore. And this crosses 1961. There's no better way for me to do this, so I don't know how else to do it. Well, 1961 is your peak value, though, Booksy. So what's the mid-range value? Like, how do you find that? I don't know. Well, I mean, the other thing is, like, where does the first one hit the top? Because that's pretty close. You could have guessed this hits the top here. You'd been very accurately right if you did on this trajectory. But it would have been a little early. So actually, the 1961 value should be near where the top is, which is like back here. That's November. This lines up, guys. And there's a November thing. Earnings thing. So that's actually November. So that makes more sense. Just according to this, I mean, if you're just looking at like when does it actually peak? It peaked. If we know that that's the top, let's say we knew this was the top. When does it intersect there? It did it back in June. But then it breaks down here later in November. So this would be way too long. Which also makes sense because I don't know why it would be that long. So what does that mean? Do you have another squeeze at this earnings? Maybe. Like a double whammy. And then this period, which goes till about March, I'm going to use the top here and as like a 50% marker. That's March. That's probably where your final like resting places. Yeah, I still think this doesn't need to go that high. Like, I know certain things are going to happen in certain ways that I can't anticipate, but I don't think it's going to be that far of a difference. Yeah, so without going like ridiculously long-winded on it, this is basically what happens here. And that's essentially 1-to-1. There may be some chop up top, like it may not drop officially till like December 6th or something like that. $15 then is like the anchor here. It's like the midline. Yeah. And then it drops from 15 in March. So on and so forth. All right. There's a lot of if-then statements here. There should be another proof in it in the move, but like there should be another one there. Well, that is there. That is there. There's this and this. Because what we would need to do is find like a wave trajectory, but this is it, I think. See this walk down right here? This is like a 50-50. It's super slow, super boring. But when it comes across here, it doesn't jump the creek until the last second, like right there. So if you look at that and you draw from the bottom to the top on this move, it's a very slow calculation. That right there, and you can see the interaction. I don't need to prove it to you. It's just there. You see that interaction right here. There's a hit on the top and then a rejection. Hopefully you don't need me to like prove that that actually happened right there, but it definitely did. And then this is the walk back around that mark here on the opposite side. And then there's another interaction here, and then on the way down, you can see again that rejection there. I'm just tracing the candles. That might be a more accurate depiction of, I don't know what the right word is. Because the wave trajectory has to be somewhere. Like there's always like a middle to a wave, right? When you look at 2020 move, it's a bit of a widening. If you look at the smallest to the biggest part of that wave, and I'm using this guy as an example of like trajectory input, but if you look at the bottom to the top, you could look at it as a trend, you could look at it as a number of things, but if you see this last motion right here, it definitely appears to be a bit more of like a widening, right, where it's kind of spreading outward and upward. That's what I'm talking about. I know you can use other markers, I'm aware of that, but I'm using this marker for that reason. I'm kind of looking back and I'm like, yeah, I remember when we was doing this analysis a while back, seeing stuff like this and being like, well, there was a trend there and it like moved away from it and blah, 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 blah. I wonder if, I don't know, I'd have to do it a different way though. There'd have to be like a middle. I remember seeing a middle here off the cat ear. Because I didn't know what I didn't call it a cat ear back then. I just called it whatever. Like there. what I'm really looking for is like that same wave principle. I don't know. It's not the best one. But there is one there. It'd have to be something to go into 15 for that breakdown to make any sense. But I'm also not using like the bottom here. Like we don't know what the bottom is yet. So there's that question mark too. And there's another one here that goes up quite steep. That's an interesting one as well. This guy. That's like the secondary one that was lost there. Those are the two marks. This one's lost here, this one's lost there. So maybe I just need to find like a middle for it. I don't know. That's a bit weird, but I could do it. It's probably this, because this is where it walked through. We did that earlier. There's a walk around that happens right there. And then this is the trajectory here that's being used on the buy up as a top and a bottom trajectory. So there's this closing candle value, or opening candle value right there. This is probably the weirdest stuff that I engage in. I think people really don't trust trajectories, which I think is wise. I don't think it's the smartest thing in the world to use because you can kind of pull them out of your butt and, you know, use whatever you want. But I don't find that to be the case most of the time. If you're looking in the right place, you kind of find what's already there. And I think that's correct. If you can see that very clear, like 1, 2, 3, 4, 5, 6, and then 7, 8, 9, and that one definitely hits off of it as checks. 10. This one doesn't quite get there. I think that's like the most middle I'm going to get. Yeah, that would work because then that puts this in the right spot. So this would be like a big backup to like 4, and then this one would barely dip above it, but it would check the next creek level up. It has to do that. Then this guy would actually hold on it, and that causes the burst. So this is like a double dip, but this one goes too low, but it does back up to this level, which it needs to do. And ultimately, that's like a big creek test right there. And then the next one is just kind of a swing motion, swing high, swing low. But it also jumps the creek and it lands on the top liquidity. It checks 485, 490 area, which has to be checked. That's like high liquidity. That's a liquid check. It's a strength test. It succeeds, and then it needs to come back up and test this level when it leaves, and that would be a triangulation there. So this is a very compressed area because it triangulates both kind of the center mark on this widening. This adds a little bit more credibility to the concept as well, that this may be like an extension here and here off of the main channel, like kind of a, yeah, like you can see right there, if you go from the top through the 50% mark, it just leads you back to like 254. But if we hit 254 right now, locally, that's like a spring motion. It doesn't quite get low enough, but that's really right where that is. So it would make sense if this hits like 254 to then go the other way. And I wonder if it hit 254. And again, like as the crow flies to this area, you can move back up. That's the 871, which is this guy, I think. Here. I mean, at least this makes sense to me. It doesn't have to be like perfect, but that's then a 50-50 around that. Instead of it being around this, it's around the widening. But it has to regain support. So just like it did right here where it pumps up and then it comes back in. This pumps up and comes back in. And maybe it does. It has to come all the way back down to 4 in September, and September's kind of crappy. But then it builds back out and does this kind of business, kind of rapid fires back up. So it starts off kind of slow, methodical, but then it ends with like a really big burst by next earnings. That's a really nice SOS. It hits off 640, which is the center liquidity. You've now traversed all the liquidity you need. You've checked and rechecked these levels around. You've checked and rechecked the levels that you need to around here, around 6. That's the top. So all those tests are done, and then you advance. That puts you right in this pocket. That's the advancement. You back up 640. Final check, and then you go again. You rally all the way up to 1960s or something like that. Now you're above and you're in that liquidity gap, which really represents, again, looking backwards, it really represents this region here. So you're back testing that previous floor, because again, this is where the combo chart valuation was. So you're back into that previous zone. You're testing like the middle here, and then if that's lost, so you come back down here, and if that's lost, then so you have to back up to the middle again. That's where things change, because if you come back up and you fail to hold this level, then you would drop back through, because that's where the liquidity bottom is. Now you're back into that range, and you're back into like a distributive function. And this is what gives you that look of like December. This guy right here. It's like that test. Like backwards liquidity test. That would be in the right spot. That's all I'm saying. For a failure to happen. I don't know about the rest of that, because because there it is. Because then it triangulates. At some point, you have to come back up here. Especially if you don't quite get it. If this goes like too low on like weakness or something, and you don't quite get it, this is where that breakdown turns into like a rough situation. Of you probably are going to have this like March moment. Yeah. And I don't know, so on and so forth. Because this would lead you right back to that area where you're back testing like the major move, but you don't actually get to go back because it's like done. It's kind of crazy how like you can play with this, and that's right back on the same level that you came back to. It's a big retracement back to $7. And then there's a big buy up off $7, and it comes back and it rejects off the top, so on and so forth. I don't know about timing, but the levels are correct. That's what you'd expect. This is the same, like fundamentally, it's the same levels. See that? I'm like not inventing anything. I'm just looking at what's happened previously. The setup, it already exists. Like that, these two yellow lines, they already exist. Like they're right there. I'm just showing you where they are. And then like look at that walk down area, and like where is that at? Oh, it's the same level as this guy. Like right there, you know? It's like back to the same levels at $7. And this line's already here. It's like ready to invite you back and try again, you know, this lower mark here. That's crazy, dude. And this dips back down, tries the low liquidity from the buy-in, which is right there. Still looks like it's holding a trend, just like this was. Then when it comes up again, it's kind of crappy. This would look way too obvious. I don't think it's going to be like 1-to-1, but there could be a lot of similarity. And then this is really more about where it's selling off regards to this previous top, which for us is right here at, yeah, right off the top here at 485 to 5. So this is where I think things might be different, because I don't necessarily think that this goes down like it did here. I think you could have a kind of a sideways action that consolidates here off this top. In fact, that would make more sense to me anyways. And then where was that middle? We talked about that earlier. Right there, yeah, it's at 485 middle. So that's where it wraps around the bottom previously. It was like right there. And I was saying, like, if you think about this as like a big picture, like support, drops through support, and then comes back up, then you do need to have a retest of the floor. The floor being this level. You could go beneath it again and double dip. It's not impossible. You definitely need to come back here. And that's why that area was so heavily traded, I think. That 485 number, we kept talking about that. So that's really the last stop. And big if it were to go even lower, I think it goes back to 316. So for whatever reason, there is some kind of a massive sell down here, and it doesn't hold up. This is where I think it comes back to like 316 and then re-jumps. I think it's gonna, then it does basically the same thing again. This picture right here, but smaller. And that's where you really have the change of character, I think, right there. That's the 1-to-1. It's like a micro version of the macro, but it fits. My guess is that it probably does this and doesn't come back down again. So that's where it has to change. Like instead of coming back to here, this is where it finally like hits that top finally. So all of this stuff happens again, but this time it like compresses and basically you have like a tiny little, another tiny version. You guys are like, this is stupid. I'm like, yeah, I know. But that's generally what happens is like it gets really micro and then you'd have like a big pump. Something like that, because this would end up being like a higher high than that drop ledge, just like this is like a higher high than that drop ledge. This one's not, so it doesn't change character yet. This one starts getting there, and then this one definitely gets there. There's no longer a desire to go back down. So this breaks out. Yeah. This breaks out and goes back to the top. Long term, this kind of nonsense is, and I'm calling it nonsense. You don't have to call it I can call it nonsense. It's fine. This kind of nonsense is where I see like that probably happens without a lot of our. We don't even really need to guess really on that very much because there's probably going to be plenty of that to go around. Like you can see that wave. If I just copy and paste it, it's going to look a little bit off because I'm just doodling stuff. But you can certainly see like that motion on the micro scale certainly looks a lot like the motion on the macro scale. And I think that on the big picture, you have to see this. You have to see this change, like, because there it is right there on the bottom right here. So we're in the right area. We're maybe a little bit slow. It looks a little slow, doesn't it? But we're in the right zone. Like that's kind of where that happened. This is about where that would happen. So we're moving a little too slow. But you get the idea. So you'd see a similar motion off this bottom, but then instead of kind of losing it, it would hold here. Instead of dropping through again, it would go down and not drop through. And then it changes direction. Now you move up to this guy because the wave completes, no longer has a desire to go low. It's changed somewhere in 2027 or 2028. And this is where things get kind of wild because this is where you have the possibility of some pretty massive moves. This is a very similar chart to the other one, but it's not exactly the same. So this is where you have that supposed cup and handle that I was talking about. And then you get like a real squeeze here. Like a macro squeeze. It's the same thing. I think I already did this earlier today. I'm not sure why I'm doing it again. I just am. Yeah, back to this level. It's hard for me to imagine what this would even look like over here. Does it have to be some kind of a humongous like squeeze? 3 to 160. Why can't that just happen right now? I think it's about that buy-in, buy-in, like 1, 2, 3. And the timing of like where this intersection is. This intersection is way over here. It's not right up here. If we go to 60 something, we'll go ahead and hit it, but then it's kind of done for now. So I think they're going to let it be and let it build out. Boring. I've been having a really good time with Tesla, Apple, Google. I've been in Tesla and Apple and Google. No, they're not all super, super green right now, but they had a really good run up today, and I'm pretty happy with them overall. Well, both of them dropped in the morning, and then they're sort of sitting on even. I'm not so sure that I'm going to sit on them very long anymore. I think Google still hasn't reached its all-time high. It's behind the market in that regard. So is Apple. I'm sitting on some short-dated stuff, but they're mostly up. I told you guys a while back that I liked Google for a couple of reasons not very long ago because I started trading it right before its earnings. I liked it because it was a little like latent. Still hasn't made that approach yet. I think it will. I think it's going to try to make that approach to 215. Hasn't broken its high yet. Again, just like the market on the whole, I think it's like kind of there, but it's not quite there yet. It's almost. And Apple, I've been liking for a long time. I told you guys I liked it back here when it was consolidating. I thought it was going to come back up, maybe push to like 300. That's just an M cross. I mean, it did what it would normally do. The way this is set up is very steep, so I'm not really sure what to make of it. If you're still in Apple and you're trading it, I do know that there's a widening here, and the widening broke out. So if you're looking at this from a very sort of standard viewpoint, this is just a widening, and it broke. So I mean, if it holds, it should go all the way back up to like 260 or thereabouts. At least like this marker here at 250.47, which is where it's currently triangulating that for the end of August time period. But I will say that on the whole, it's really hard to tell like how high it goes and how long it takes, because the way this built out implies that there's a creek here at around 215. It's already overbought on the daily, which doesn't mean a whole lot. If you look back at Apple being overbought on the daily, it's like, so what, you know? When this finally got overbought, that's when this has like the last rally. When this got overbought here as the last rally. But it lasts for quite a while, typically. So, like, is it overbought? Yeah. But I could see this being kind of a last rally back to the top. Maybe it's a double top at first, you know, and then we'll see what happens going into next year. I don't know, you know. So there's certainly a lot of possibility here. I would say for now, it still looks pretty bullish, but there's a definite possibility of a creek retest that's maybe lower than some other parts in the market if they back up, because I'm seeing it as, yeah, it's bullish, but there's a pretty low bar here, like to like 217, excuse me. So I think I said 315, but I meant like 215 area. So like, I do think, yeah, this could stay bullish and keep kind of building out and upward for the time being. But then I'm curious to see if we have any kind of I think it's going back up here, but I think you then have this, maybe more so than other tickers, you have a stronger possibility of a bigger backup or a deeper backup sideways region here before trying to do anything else. It's behind the market, so it's playing catch up. I think there's a possibility it goes to 300, but I do think that's a longer term analysis. So just take that for what it is. This looks really good to me on the RSI. It may look, again, overbought, but in theory, this is just getting started. Like, it finally jumped its creek. It just advanced. So it really should be a situation of, okay, we just jumped over the creek. Like, let's get started, you know, on the move. It reminds me a little bit of this, but maybe on a lighter scale. Like, once this jumped up, you can see right here, it jumped up. It has some early advancement that gets kind of overbought, and it does have a pretty steep backup, which is what I'm saying. Like, maybe there's a steeper backup before it tries again. But even still, the RSI stays pretty strong while this is pumping. So I wouldn't be surprised if the rally kind of dies at like 250, 260, and then it has a really steep backup period, and then it goes again, and it rallies to like near 300, something like that, by the end of the year, by February, rather. That would make sense to me. So for now, I'm going to ride its coattails until I feel like it's done. I don't see any reason to let go of it just yet. Just backed up to the top right here at 224. It hasn't lost it. So if it holds this throughout the day, I don't personally see a reason to like dump it just yet. It didn't reject off of it. It's actually higher here. So as long as that holds on, it should be in a good place. It's just a sell-off period. It's a dividend date. And then same with Google. It's kind of the same story. They both have just had breakout moments. Tesla did as well, where they jumped a creek or a big resistance or something. Google's was like right here, and it broke out. So same deal. It's on the weekly. It's not even overbought. You go to like 4 hour or daily, it probably looks kind of meh. But this thing has a propensity to rally quite a bit farther on weakness. And again, where is that backup going to today? Kind of just looks like it's going back and like retesting the tops that it was, at least right there. I mean, it could go down lower for a, this could be like an SOS with a backup. Like you could have a consolidation here and then drop back down and then go and shake out. That's totally possible. But I'm still seeing it as likely going up higher into the end of August. So I think we're going to see these guys are front running while AMC is like dying. And then Tesla, same story, different ticker. It went low. I knew that has a tendency to happen on Tesla. Didn't quite get the gap fill, which was interesting. But it dipped below what would be considered like a triangle here. And that could be seen as a weakness. But a lot of times it'll do that, and it did it on a divergence. So there was a pretty strong divergence. I think it was like on the daily or something, but it was like right there. And then that was lower. And then it pumps up back to the top. It's enough to get it over the top here. It's kind of like what we're talking about at AMC. Could this distribute off the top? Yeah. I mean, in theory, it could. It could also have like an SOS with a backup that needs to come back down and check like, 328 and have a kind of a final flush or something like that before an advancement. That wouldn't surprise me either. And then certainly there's a possibility that, it just slumps back down and dies and keeps going down, in which case I'm done with it, obviously. But for now, I'm like, this seems reasonable. I've got this thing at 450, which is pretty insane, but I can't really find anything else. I was looking to try to figure out like where else would Tesla go. It just seems unrealistic. But then again, the last time it pumped up over 350, which is the same area we're talking about right now, it just ran all the way up to like 480. It did like a 40% spurt in a matter of 11 days or 12 days or something. So I mean, it's a little ridiculous. Like, I don't really know why that's as fast as it is. But I don't think it's unrealistic that it could hit 450 by the end of the month, which is pretty insane, I know. So I'm like, the overall picture here, I think there's a decent chance that this week could end up being a little bit more of a backup week. But it would not surprise me to see this thing rally really hard in the end of August. And that kind of finishes a lot for me on the big picture with these tickers. I think I'd be out of them all and moving over to AMCs and stuff. This is an old earnings thing, by the way. That was like last week. Yeah. I actually wouldn't mind seeing this kind of back up before a bigger rally. I think that'd be kind of nice, like a pop right here. Maybe a bit of wishful thinking, but I think that would be pretty solid. I think the target for this is quite high, though. I mean, if you use like a flag target, it's like right up here. So long term, I'm still like meh on these. Some of them I think, like Tesla, I'm like, I have no idea. I could slump or go sideways for a long time, potentially, but I'm going to be rotating my positions out. I'm going to see if we can catch some green, final bits of green on these guys, and then no matter what happens here, if it's an SOS and it goes, great. If it doesn't, it goes back, and then it goes again. I don't care. I'm going to be looking for those exits, and then I'm going to be rotating a lot of those positions into AMC by the end of the month. If AMC's down, it's perfect, Great. It's exactly what I want. You know what I mean? Like, give me some liquidity and let me move it to where I want to move it to, and then do it again, and then get out and wait, do it again kind of thing. I got to be done. I got to say I'm done, guys. I got to eat lunch. Um, I didn't talk about GameStop today, and I didn't talk about it because I just didn't want to like focus my time on that. And AMC earnings was announced. It was a beat, but they're going to have a conference call, I'm sure. I'm not going to broadcast it, but I'd definitely be curious to see if they have some kind of a negative catalyst for downside during that call. I'm just really curious to see if we get that liquidity test. For GME, I don't feel any particular way about this, except that when we had this happen previously, I don't want to get into super high detail about this, but there's this motion that's been going on right here. You can see it on the big picture and then the small picture. This motion right here of like chop, hold, and then like test the bottom again. That's the same motion that to some degree that we talk about on AMC, and it happened here as well on the big picture. I think it's a curious one because I think we're doing something similar to that right now. It just doesn't look quite the same. I think we've got sort of this bounce in motion right here, and we're going back down and testing the bottom. It reminds me again of like that AMC setup before. Frankly, it looks a lot like that AMC setup to some degree before the big run in April. And I'm not trying to make this one-to-one, I'm not, but it's very similar. You know, we talked about that rising trend here. Like that's built into this, and it's there right here. It's the same thing. It's like all of a sudden, if this thing makes that higher low, and this looks like a micro iteration of that, 1, 2, like auto reaction and phase B top. And then if it drops down and it forms like a little spring here, it may just like fly, you know, it may just start going. I've talked about the possibility of downside a lot on GME, so I don't want to talk about that right now. Yes, 17 is on the table. I don't think it's impossible that it does that by August. There's reason to believe it could do that. But I'd be very interested to see if while AMC is going into a drop period, I think it'd be quite appropriate to see GME do something like this, like start running up into a breakout. And then by the time AMC's ready to go, AMC's in like a spring, I think GME may already be like way up here. It may already have been running. It sounds a little weird, but I genuinely think that might happen, that it runs up into its earnings date. So between like the 22nd or thereabouts, maybe even a little earlier for that and in its earnings day, I would not be surprised to see GME start front running AMC. And there's a lot of speculation that I have about earnings and whether that runs at earnings or right after or into it. But I'm thinking that this seems like the best. Like, it's really, to me, this is very probable. I think this is like a repeat of what we just saw. It looks like a micro iteration. Even if this drops, I'm like, I think it's going to front run. So I'm more bullish on GME in some ways than I am AMC over the next 10 days. If I had to pick one for the next 10 days, I'd say GME is a better pick. Because I have a feeling that it's going to run ahead of AMC. It's done it in the past. It frequently does this thing where it's like already there, you know, at the moment of the breakout. It's already like advanced back up to where it needs to be. Where AMC tends to like kind of stay stagnant until the very end. This happened here in this run up last year. It also happened in the macro run up. It's the same thing. GME was already going. This is like, I'll show you because this is September. I mean, for Pete's sake. This is January. Like, it's already in this, like, SOS zone. This is almost no different. So it's already approached the SOS by the time it's time to go in January. And it did the same thing here. Like, it's already up here, ready to go in May. I don't find that to be a coincidence. I think that's just the way that this is trading. Like, it buys up early, gets ready. Whereas AMC is going down into a dip. It's like the opposite land. It's not in an SOS period. It's not showing strength. It's showing a strength test down. So my imagination is a bit strong perhaps, but I do think that if the 22nd is legitimately what we are expecting, then I think by the 22nd, GME is kind of already out. Like I think it may already be broken out, which would either entail it's at least above 25, but it's very possible it's already up here at 36. Like that's entirely possible. Like it's already at 36 by 22nd of August, which is coming up. So we're talking about very, very soon. Very, very soon. So yeah, that's another one that I'm like, I wonder if that moves the way I think it's going to move if it's already advanced. It's already made its move by then. Would not surprise me. That's all I got for you guys. I appreciate your time today, I do. And I hope you guys have a great afternoon. Tune into the earnings, listen to what happens, watch the chart. I'm sure it'll be interesting. I'm really looking forward to the next month for these tickers. I really am. I think we're going to see, before things get kind of sour, I think we're going to see these last minute disbursements of liquidity. And then I think we're going to have some souring going into November. But I do think that we're going to have these last minute disbursements of liquidity. I'm fingers crossed anyways that happens, but I don't see why not. So, all right.